Good morning, everybody. Welcome back to another episode of the Market Open. It is a Wednesday, September 17th. We are live, and today is a big day because we officially will be having the September Fed FOMC meeting. This is going to be a big one, folks. I'll be live at 2:20 Eastern Standard Time, and we're going to see what Mr. Jerome Powell is able to say. But today we'll know 25 or 50. What is going to be the rate cut decision? If we're even going to get a rate cut in the first place, is it going to be a hike? Is it going to be a cut? Is it going to be a pause? Is it 25? Is it 50? Obviously, everyone thinks we're likely going to get 25. That is what the Fed future probabilities are telling us. There is a 94%. That's actually a little bit lower than expected. 94% chance. You can even bet on this on the Robinhood prediction markets on what's going to happen. And if you are right about 50 basis points, which has a 6% chance, you would make a lot of money, about 11 to 1 on your capital. But if you're right about 94%, then the risk reward is not that amazing. But nonetheless, more likely than not, we're going to get a rate cut. And if he hikes, yes, I think Trump might lose it. If he pauses or he hikes, President Trump will lose his mind. And so, which would be kind of funny to see if that ends up playing out. But if that doesn't end up playing out and we end up getting a cut, then hopefully the markets will be stable. So I think the sort of theme around the entire show today, and I don't even know how much equities are going to react. I mean, you got some stuff going on in the pre-markets. Some stocks are up, some stocks are down. But realistically, I don't think we get a massive move before 2:30, or at least before 2 p.m. because the decision comes out at 2 p.m. I'll be live at 2:30 when the actual press conference goes live. But I think any movement before 2 p.m. is relatively inconsequential and insignificant because we need to get the decision. And once that decision is out there, then I think stocks will have more room to move. And I think a lot of them will move together. Like if it's a sell the news, every stock will algorithmically start to go down and hopefully create an intraday bottom. And if it's a buy the news and get ready for rate cuts, and if Powell signals, and also here's the other thing I forgot to mention yesterday. Today we get the summary of economic projections. And the summary of economic projections is very important. We got some NVIDIA news in the pre-market that we'll talk about as well in regards to China. That summary of economic projections highlights how much they plan to cut over the next 3 years. And we will know if the Fed is thinking, hey, 75 bips is on the table for this year. 50 bips was what was guided for back in January. And then we had no cuts for the last 9 months. If they signal 75 to 100 by the end of the year, I think that's where the market really rallies because they're like, oh, this is way ahead of what we thought was going to happen. You have some banks like Goldman Sachs saying 75. Bank of America said 0 cuts for the longest, and now they're thinking that we're going to get 50. So that's going to be actually even more important than the rate cut decision itself, which is what is the SEP? What does the dot plot look like? And that's going to be very important for us to see as we get into these announcements. So we got a lot to get into. Zoko says if he hikes, he is petty. It would be so petty for him to hike. Like it would actually be hilarious, but I would imagine that doesn't happen. So we got a lot. We got a lot to talk about. Thank you everybody for being here. We are going to get into it. Good morning. I think let's get started with this NVIDIA news, and then we'll get into it. And I just want to say, I tweeted this last night. And I think it's so true. Throughout the day, we have all marked our calendars and set our alarms to listen to a guy speak about interest rates. None of our friends or family know about how obsessed we will be. I mean, if anyone that you're related to, family or friends, significant other, do they actually know who Jay Powell is? Do they actually even care about the Fed FOMC decision? Like, I think maybe 1% of you have someone in your life that actually knows about the person you're going to be listening to utter every single syllable and make sure you know exactly what those syllables entail in terms of bullish or bearish. But that's why we invest. And that's why a lot of us are up a decent chunk on our portfolio year to date, because we are so obsessed with the little stuff. And the little stuff sometimes ends up paying off to care that much about it. Yeah, everyone's saying no. No one did. Okay, some of you guys are saying my wife sure does know because she knows I'm going to be busy at 2:30. But yeah, the majority of you, like my mom and dad are really into the markets now, and they still don't know who the hell Powell is or care about who that. It's just like they want to know the implication of stuff, but they don't actually care about listening to the guy. And all of us are going to be listening to the guy. Daryl says my girl now realizes how important Jay Powell is. Kurt says my wife does because she knows rate cuts equals new house. That's hilarious. Yes, that's the other element to this, the housing market. We'll talk about that later today. But if we do get rate cuts, hopefully that increases the ability to have a more liquid and stronger housing market. Okay, so let's get into it. The first kind of story we'll get into is this China stuff. This came out like, I think 10 minutes ago. China apparently, they're banning NVIDIA from selling chips. China tells tech firms to stop buying NVIDIA chips, as per the FT, also reported by Reuters. Now, we do have a quote from Jensen, where I don't know exactly where he said this. I think he's in the UK right now, and he's in a press conference. But Bloomberg reported, NVIDIA CEO says, I'm disappointed with what I see, but they have larger agendas to work out between China and the United States. Yeah, it was in a different press conference in the United Kingdom. Look, I don't think this is that big of a deal because every other week China has some issue with NVIDIA. And the reason they have an issue with NVIDIA is not because they don't like NVIDIA, is because they want to get a better deal with the United States. NVIDIA is down about 1% right here. It's basically back to where it was on Monday when the China NVIDIA monopoly antitrust stuff came out, which, you know, there's not been any meaningful progress on that update as well. Tesla right there, 417 in the pre-market. So I don't know. I mean, realistically, are all these Chinese tech firms going to stop buying NVIDIA chips? I don't think so. Jensen saying, hey, I'm disappointed with what I see, is telling that maybe that updated range of guidance that he said he was, I mean, that he said NVIDIA was able to achieve, which is around 2 to 5 billion extra on top of that 54 billion base guidance they gave for Q3. Maybe that ends up being 0 instead of even 2 billion if we don't get any actual sales into China. I mean, Trump can, you know, say one thing and then boom, we can start selling Blackwell into China, but that looks like it's not happening yet, especially not in the midst of their negotiations. So yeah, not the best thing for NVIDIA. Nonetheless, we're going to see how the market reacts. In general, it's not just NVIDIA though. I mean, that news is NVIDIA specific, but we're red in the pre-markets. I mean, Palantir is red, Tesla's red, Hoodie is red, Grab is red. Grab did get the third day in a row close above $6, closed at $6.30, which was very nice to see. And I think today it obviously will be tuned to a lot of algos in regards to FOMC. But if it can hold above 6 again for the 4th day in a row, I think that would be very, very bullish for Grab. You got Amazon red, Meta's red. I mean, I think pretty much everything is red. And I think it likely will stay red until we get clarity on what's going to happen with the Fed. And even when we do get clarity, the question is going to be, is that clarity enough for the markets to be excited? And so throughout the rest of the day, I think we're going to find out. BMNR is green. That's, dude, BMNR went wild towards the end of the day. It hit 57, right now 56.33. So we're going to see how this one plays out. Again, I do have 6,000 shares and I have covered calls for 60 in November. My break even is 68. So if we get to 68 before November, I will roll those covered calls. But it's been doing incredible. It's been doing absolutely incredible. And it's really started to kind of break out a little bit more. It's also breaking that $55 range while Ethereum is at 4,500. Last time it was doing this was when Ethereum was at like 4,750. So the fact that Ethereum has gone down, but Bitmine has actually gone up, means that they've expanded the multiple on their MNAV. And that means this company is able to get a multiple, which is a good thing. And so as long as they keep that multiple, that's not the worst in the world. Grab downgraded by HSBC to hold. Okay, so I saw this morning. I'm also seeing a report that I can't find. If anyone can find it, please let me know. On Grab getting upgraded by JP Morgan to 720. The only other analyst on the street that has a target for Grab around like the higher levels in the single digits is Mark Mahaney from Evercore, who is one of my favorite analysts, but he has them at $8. Everyone else on the street is like at 550 or 60. Yeah, there it is. HSBC downgrades Grab from buy to hold. I mean, look, they're being conservative on the price. They're being conservative on the valuation. I think fair value is closer to 850. So it's not surprising to see them have a hold right there. But I did see some reports that I can't confirm yet that JP Morgan upgraded them to 720. I just think, look, if Grab gives us a stunning Q3, which is kind of what I'm expecting, and accelerates top line growth to 30%, along with the type of volume that's coming in right now, which I don't know why it's not because of me. It's as much as I tweet about it, and I don't tweet that often about it. I'm not obsessively tweeting about it every day. Like, it's really, I don't think it's retail. 100 million shares 3 days in a row. I think retail has now caught on to some parts of it, but I think the initial jump might have been something else. So we will get to see, especially as rates come down, how the street thinks about it. Again, I think in a world where you get rates that come down, Grab gets a higher premium because they're actually growing, and it's hard to ignore something that's growing 30% in a world where rates are coming down. But ultimately, the market will have to decide kind of how this one ends up playing out. Lyft is up 10%. All right. So what's going on with Lyft right here? Wow. 2260. Okay. What's the headline on Lyft? Is this a partnership with Waymo? Is that what we've got going on? Lyft blasted off a couple days ago. And that was pretty exciting. Lyft and Waymo launched partnership in autonomous to Nashville. Wow. Lyft and Waymo partnership in autonomous to Tennessee. That came out literally 1 minute ago. 1 minute ago. This is Lyft surging right in front of us. Yeah, there you go. Look at that. 14%, 23 on. Congratulations to anyone who has Lyft. Is Uber down? Uber is down. Uber is down on this news. There's your candle on Uber going down. This is interesting, bro. Waymo, I mean, Google's the big winner here, right? Google, there's the red candle on Uber. Google is the winner that finds a way to get their autonomous technology partnered with all these other fleets. Look at that green bad boy on Lyft. Wow, 23, just exploding from that partnership. Uber CEO did sell shares. He sold about $22 million worth of, I don't think that's the biggest deal in the world. I mean, 22 million bucks worth of shares doesn't seem like it should move the stock that badly, but it looks like at least the red candle right now on Uber is from this Lyft news versus the Uber news. Yeah, it's like it's instant as soon as that announcement came out. So to me, that feels 8:55, 3 minutes ago. Yeah, that feels more like Lyft versus the sell-off. Where's Tesla on this news? Tesla is 416. All right, so Tesla's down a little bit. Not affected too much by that. I mean, look, I feel like it's bullish for Waymo and Lyft, but once again, the question is simply, hey, who is going to scale faster than each other? Like, or how you're going to scale faster than each other, and then who's going to capture the market share in terms of the mind share of people in that location, in this case in Tennessee, to be able to get them to use a Lyft via Waymo or Uber via Waymo or a robotaxi. And I think that's going to be a race over the next 5 years that we're going to see play out. I think NVIDIA wins at the end of the day because a lot of that self-driving technology is trained on NVIDIA. But nonetheless, those are going to be players that we definitely have to keep an eye on. Yeah, shout out to Nick Moss. I don't know if he's in the chat right now, but he was really long some Lyft calls. So if he's in the chat, congratulations to him. I know Benny is deep on Lyft as well. There you go, 15%. 18%, never mind. My goodness, 24 on Lyft. Okay, bullish, not bad. That's what you got on Lyft. All right, so let's transition into some of the other macro stuff we have to talk about in regards to interest rates and the Fed. Well, first of all, let's pull this up. Mortgage refinance demand is starting to spike up to the tune of 50%. Here's an update on that. And obviously this would be bullish for a company like SoFi, but also for reopening up the entire housing market as well.
Diana Olick joins us now with the numbers. Hey, Diana.
Hey, Joe, it is the day. Yeah, and another sharp drop in mortgage rates caused a run on refis. Applications to refinance a home loan jumped 58% last week compared with the previous week and were 70% higher than the same week a year ago. That, according to the Mortgage Bankers Association. Now, the refinance share of mortgage activity is now nearly 60% of total applications. This is the average rate on the 30-year fixed for conforming loans dropped to 6.39% from 6.49% for loans with 20% down. The average loan size on refis reached its highest level in the 35-year history of the survey, as those borrowers would see bigger savings. Now, refis for ARMs were also very strong, increasing to nearly 13% of all applications, the highest level since 2008. ARMs, of course, can offer rates up to 75 basis points lower than the 30-year fix. And I would note that rates dropped sharply again yesterday to the lowest level in 3 years on a separate survey from Mortgage News Daily. This ahead of the Fed, and as lots of experts have said, and one of the guests earlier on your show, Joe, said rates could actually go up today after the Fed if there's a slight sell-off in the bond market. Totally possible.
I know.
There said that.
So what do? Cut rates and they go up. You raise rates and they go up. They go up. That's on.
It's pretty interesting. So it looks like the refinancing demand is starting to heat up, even though we haven't even cut rates yet. Mortgage rates came in at 6.12%, 6.12 yesterday. So it was a low over the past couple of years. And it was a low in anticipation of rate cuts. And hopefully as rates come down, bond yields will come down. Whereas the 10-year right now, which might also allow that 30-year to come down as well. Wow, 10 years at 4.02. I mean, maybe today's the day it falls. But I mean, a lot of this 25 basis points is already baked in. This thing was at like 4.2 a couple months ago. So even getting it down as much as it is bullish. But we got to see if that can continue to fall down once we get the official rate cut today by Powell, hopefully. 25.18 on Lyft. My goodness. This stock is up 24%. At one point, it was up 30%. What did it touch? It touched 26.40. It touched 26.40. This is the announcement with Waymo in Tennessee, which is allowing this to get some momentum. Yeah, and Uber is definitely going down on the news. I mean, I guess the market's selling off Uber. It's kind of stupid, in my opinion, to sell off Uber just to buy Lyft, given Uber has a massive partnership with Waymo. But I guess the market's thinking, why didn't Uber get this partnership with Waymo in Tennessee? Why are they using Lyft? And from Waymo's perspective, they might just want to diversify their fleet, which makes sense. But market might not like that for Lyft's competitor, which is Uber. So Lyft right there, if you're in it, congratulations. It is green. And this is what a bull market consists of, right? Like last week it was Nebius, random $20 billion deal with Microsoft, boom, up 40%. Today, Lyft up 30%, up with a partnership on Waymo. I mean, like you want to see the diversification of all these different things happening across sectors, whether it's ride hailing or data centers, and allowing that to ultimately affect the broader market. So hopefully we continue to see news like that. And if we do, then I think we should be continuing to get a little bit more momentum. All right, so let's get some updates on this 25 bips cut. Let's hear from Ryan Detrick, who has been pretty bullish over the past couple of weeks and or past couple of years, and get his analysis on what we think is going to happen. And then we'll see what everyone else thinks for rate cuts in September, which is today.
Yeah, John, thanks for having me back. You know, we do. I mean, I know you've talked about it all day, and I've shared this too. 20 out of 20 times, the stock market's higher a year after a cut within 2% of all-time high. That's where we are. But I'm a big message of the markets person. Like, what's the market saying? I mean, a year ago right now, the Fed cut 50 basis points. I think we forget that. Everybody told us, oh, my goodness, every time they cut 50, it's a recession. We push back against that in a big way. And as Mike just talked about, now we're up a lot. But what's leading this market, right? You've got consumer discretionary relative to staples hitting new highs. You've got staples relative to the S&P 500 hitting new lows. High beta relative to low beta hitting new highs. Long story short, the market is telling us this is still a bull market. It is the second half of September. Everybody's pretty excited about this rate cut. Options markets are pretty, kind of optimistic. Maybe you can get a little bit of a banana peel sell off on sell the news, but bigger picture, this is still a bull market. We like the fourth quarter rally here.
Okay, so Omar, you mentioned the labor market. Are tariff concerns taking a backseat now for the rest of the year? Labor market fears riding up front?
Yeah, I think the uncertainty around tariffs has clearly gone sideways. I think there's still, potential that will actually come back later in the fund, because it takes around 18 months for tariffs to actually take into effect. And if you remember, a lot of the tariff cost was actually done early in the year. A lot of the consumption that we ended up having across consumers and companies for trying to prepare for the potential increase in cost, happened early in the year. I think what we did observe, which was kind of interesting in this bull market, is that the level of concentration has actually benefit for those companies that have the most ability, higher margins to potentially absorb the potential tariffs, impact later on.
It's almost like the tariff stuff that we all needed, we all cared about, and we all were like, hey, this is going to be one of the most important. It's like no one even cares anymore, right? And the PPI last week, that was a massive beat to the downside, 2.6 versus 3.3 expected. I don't know if it's a one-time thing, but it kind of showed maybe producers aren't increasing their prices at the level we thought. Now, again, the PPI before that was a beat to the upside. This was a beat to the downside, so maybe it's leveling out. But if it continues to not be as aggressive as we think it is going to be, then maybe that's a good thing. And as a result, I think that bull market continues in the context of what's going to happen with the Fed today. Now, there's 4 simple reasons. I put this out on Twitter yesterday why I think the markets. I agree with Ryan Detrick. You could get a little bit of a banana peel sell-off and okay, you get 1 or 2% down, but that ends up being a buy the dip. The 4 reasons are simply the market's priced for 25 bips. So if we get 25 bips, it's not a surprise. And I don't think we're going to get 50. So that's the first reason why stocks really shouldn't sell off today, or it shouldn't be a sell the news. Like the market knows this is going to happen. Number 2 is retail sales was really strong yesterday. We talked about it, 0.6% month over month versus 0.2% expected. In fact, the XRT retailer ETF, ticker symbol XRT, is up 10% year to date. So even if you have a weak labor market, it's not like we're cutting into weakness, which is kind of the bearish narrative around rate cuts, because wait a second, consumer is strong, retail sales is strong, and the retailer ETF, which is a amalgamation of all these different companies that are producing their business models around the state of the consumer, is up 10% year to date. If that was up like 1% year to date, those companies obviously would be having crappy earnings, which means the consumer would not be doing as well. And you can make an argument that we are cutting into a weak economy. I don't think we are. We're cutting into a weakening labor market, which is different from cutting into a weak economy. This is not like 2008 that we're cutting into, or 2022 where we have inflation at like 12% that we're cutting into. It feels like a more subdued economy that is showing signs of weakness, but not showing signs of catastrophic disaster. And that is why I don't think equities need to fall simply because we're cutting rates by 25 bips. The AI tailwind, number 3, is only getting better. I mean, I don't even think I need to explain that. We talked about a lot of charts yesterday, CapEx, that's not going away at all. Humanoids, FSD, AI agents, that's just beginning. And then PPI was a big miss and CPI is stable. So again, we're not cutting to the point where people are like, oh, there's going to be massive stagflation. It's like, no. CPI was stable. PPI was a beat to the downside. As long as that continues to be stable and growth goes up, you are going to get growth, even if you have some inflation, but it's not going to be stagflation. And in fact, remember in May of 2024, when Powell gave us that mic drop where I don't see the stag or the inflation. I mean, if today he could give us another mic drop like that as well, I don't know, put in the chat what you think his best mic drop could be that matches the level of just like unicornness of I don't see the stag or the, I mean, that line was just epic last year. It was a unicorn line. I don't know if he'll be able to give us a line like that this time, but it would be nice to see. Also, we need to make sure he has a purple tie. We need to make sure I resign. We need to make sure he has a purple tie. And hopefully the purple tie is matched with a dope statement. So I just hope he says the word tax on my call sheet bets. Is that what call sheet's betting on? Call sheet's betting on him saying a certain word. I mean, it makes sense. Wow, look at this. Yeah, what will Powell say during his September press conference? Credit recession probability. I mean, he's definitely going to say recession. He's going to say that, and as soon as he says it, we're going to get a little dip in the market because every time you say the R word, people get scared. But all right, we're gonna see. This is what we do, dude. We analyze every single freaking word that Powell says, and that's why ultimately we invest. Chris Patel says we have a bifurcated economy. Those that are doing well are doing really well. Those that are not are getting hit really hard. Yeah, and so a couple things on that comment. First of all, Chris will be a regular on the market close starting Thursday. I told you guys a couple weeks ago, Chris and I were thinking of doing something like that so that he doesn't have to like randomly join on the market open streams. But we can have like a set segment for him. So on Thursdays, probably starting around 4:30 on the market close, 4:30 to 5:30, it'll be kind of like a macro Thursdays with Chris. We'll have a bunch of topics, bunch of charts, bunch of stuff, nerdy stuff about interest rates, inflation. So every Thursday starting tomorrow, Chris will be live 4:30 to 5:30 on the market close. So that will be our macro segment for the week. Number 2 is, this is a really important point he's making. Those that are doing well are doing really well. We talked about this idea of, hey, if you have 1,000 shares of NVIDIA, and then you borrow money to buy more shares of NVIDIA, and then NVIDIA goes up, which means you have more ability to borrow more capital to then maybe fund the rest of your lifestyle instead of having to buy more shares of NVIDIA. But let's say you keep buying more shares of NVIDIA and then NVIDIA keeps going up. Like the rich get richer as the margin continues to compound. The collateral, that collateral is your assets. Those assets are not something that is not appreciating, but rather something that's going up 30% every year, like in NVIDIA. And there's a variety of stocks you could use in that example. Those people, a lot of those people are like you guys in the chat, are doing very well in life. And, you're not really feeling the pain of milk going up by a couple bucks. And then you got other people that don't own any assets and are living paycheck to paycheck. And that's a totally different lifestyle. So the interesting thing is you would think that dichotomy would kind of be cataclysmic for the economy to an extent, right? That some people are super rich and some people are just like really struggling to get by. Therefore, how can the economy survive? Ironically, the people that are that wealthy, or the one, I think the stat is like 10% of the population is doing 50% of the spending. And because interest rates are high, they're able to get a lot of risk-free money. Stock market's going up. They're able to keep spending. They're able to, they're able to keep pouring money. So as soon as the market collapses, I think a lot of wealthy people will not be able to keep spending at the level that they're spending at. But the market has not collapsed yet. And one of the reasons the market has not collapsed is because of AI. And it all goes back down to these sort of secular themes that are not going away anytime soon. However, to prove the case that it is a bifurcated economy, take a look at this chart right here. U.S. consumer credit card debt jumped $16 billion in the month of July to $5.06 trillion, which is the third highest on record. By the way, BM&R right here, 56.86. Also, for those that don't know, Chris is part of the BM&R army. Of course, Chris and Chris Fashion bought a crap ton of call debit spreads last week, and he's up on a bunch of those. So he is part of the BM&R story. So you got credit debt that's continuing to jump. This is the second largest monthly increase of the year, up from 9.6 billion in June, 16 billion in July. Over the last 5 months, consumer credit has surged to $103 billion. So when we talk about this bifurcation of the economy and people having to get into debt, which is not the same as margin debt, because margin debt as an investor is backed by your assets, and yes, you can get margin called, but obviously you can use that money at a very low interest rate compared to credit card debt to be able to fund your lifestyle. And this is kind of like the tale-old story about wealthy people don't sell their assets, they borrow against them, and they're able to then use that leverage to fund their lifestyle. Whereas people that don't have those assets, they have to take on 29% credit card debt if they have a revolving balance. So it's one of those things where it's like, I don't know if this breaks. I would imagine it doesn't. Definitely interest rates coming down gives it a chance to not break, because those rates come down across the board, whether it's mortgage, auto loans, consumer credit card rates, etc. Back to school spending. Yeah, I mean, like, obviously there could have been a bunch of reasons why credit card debt jumped in July. But the point is just making the argument that this is absolutely a bifurcated economy. And I think a lot of the bears have been saying it's unsustainable to have this bifurcation, but ironically, I don't think it is unsustainable. Obviously, we want to get to a world where it's like not as bifurcated, but it doesn't mean the economy has to collapse. And hopefully the Trump administration policies over the next 4 years allows more of that bifurcation to not be as aggressive as it is. But if the stock market keeps going up, it's kind of one of those things where it's like, you just got to get in. You got to get in, because once you're in, the compounding takes place immediately. And this is the secret that a lot of investors have figured out, that the majority of the world has not figured out. That once you're in, and you're in the right company, even if you're just in the S&P, forget the right companies, you're in. And you can completely change your life and be able to navigate life in a totally different way. But you got to get more people in. And I think that's one of the reasons the dip keeps getting bought, because a lot of retail that knows they need to get in, maybe they're waiting for the right opportunity. Once they get a 5-10% dip, it doesn't become a 20% dip because they jump in. Along with the institutional investors that completely missed the opportunity all year, they jump in as well. So I think we end out the year in the right way, and I don't necessarily think it's going to be a massive sell the news. And if it is, I think that news ends up becoming the buy the dip if we see some algos to the downside today. And so we are going to see, Fed says, I did a mortgage refi at 7% and saved over $600 a month. Not too bad. We're getting a lot of mortgage refinancing demand. Obviously, we're seeing the interest spike because of interest rates coming down, which is a good thing. And as long as that trend kind of continues today with Powell confirming a rate cut, then we're probably going to see more of that demand. I think SoFi probably is a beneficiary of that. SoFi right here, 27.17. That's down a little bit in the pre-markets grab right there. 618 NVIDIA, 172 S&P. Basically at all-time highs. Again, last 2 weeks of September are supposed to be worse than the first 2 weeks of September. First 2 weeks of September have been not as bad as a lot of people thought. So if we can keep the S&P at these levels, I think that would be pretty good. Google still holding above 250, not too bad. Amazon 233, Reddit right there at 265. Hoodie got to 118 yesterday, right now at 116. And then you have Nebius and a lot of these data center plays also that continue their momentum. Nebius right there, 91 after they've completed their convertible note for debt. That one is up 2% as well. Yeah, I'm seeing a lot of these. Goldman Sachs raised their target from 77 to 120. There's a couple of other firms that raised, I think the street high is like 185 on Nebius. That Microsoft deal, which was more than the value of the entire market cap of the company, just completely re-rated it. And the ability to re-rate it obviously was very exciting. You guys are saying there's a Figure partnership. Okay, did Brett tweet something? We know that he raised at 39 billion yesterday. Oh, yeah, new partnership. Okay, I'm seeing this for the first time as you guys. Today, we're announcing a first-of-its-kind partnership with Brookfield. Brookfield is one of the world's largest asset managers with over $1 trillion of assets and 100,000 residential units. This deal provides access to real-world environments and compute needed to scale Helix. With access to Brookfield's massive scale, we plan to develop the world's largest and most diversified real-world humanoid pre-training dataset, build critical AI infrastructure for scaling Helix, Figure's internally developed AI model, deploy humanoid robots in new commercial settings across Brookfield's portfolio. Using the largest pre-training data set for Helix, using human video capture in a variety of Brookfield environments, we will amass critical AI training data for Helix to teach humanoid robots. Helix is their action language model for the robots. They will learn how to move, perceive, and act across a spectrum of human-centric spaces. We have already launched a collection of efforts in their residential assets. This will allow us to scale AI infrastructure. The partnership will explore broader infrastructure collaboration, including support for next-gen GPU data centers. It'll accelerate commercial deployment. We're excited to be exploring commercial deployment. Brookfield's large operating portfolio allows Figure to access new and diverse commercial development opportunities. Okay, there you go. Brookfield and Figure. I did not expect that. I thought there was another company that Figure might be partnering with, but it looks like it's Brookfield. Brookfield is one of the world's largest asset managers with over $1 trillion of assets and 100% or 100,000 residential units. I think this makes a lot of sense. I mean, obviously, Figure needs a lot of training data to be able to build out their models, for those models to be effective and for those humanoid robots to be able to do things in the real world that are trained on real world things. So it makes sense. I also think Brookfield, if I'm not wrong, they participated in the Series C. So that actually makes a lot of sense. If they invested in Figure at $39 billion, they would give them the ability to train in their residential units as well, which is not too bad. Some of you guys, I would imagine, own Brookfield stock. Ticker symbol is BN. How has that stock done this year? Let me take a look at that. BN stock this year, 21% year to date. And they're from Canada, right? If I'm not wrong, Brookfield's headquartered in Canada. Yeah, not too bad. All right, so there you go. New partnership with Figure and Brookfield. Thomas says it's one of my largest holdings. Wow, okay. Toronto, yeah. All right, Brett, partnering with Brookfield. We're going to see how that one plays out over the coming weeks. He says there's another announcement this week, so there's one more thing to expect, and so we'll see. He said he has 3 announcements this week. Again, one of them was the Rays, and today it was Brookfield. All right, we got the Speaker of the House, Mike Johnson, on live. Let's see what he has to say about it and get any more clarity on what's going to go on with this chip ban.
The American agenda has had a way of having some backlash on some American companies, and we're kind of seeing that play out with NVIDIA this morning. We just gave a comment from NVIDIA's CEO where there's an article out today in the Financial Times that says Chinese authorities have told Chinese companies that they are no longer to use any chips or buy any chips from NVIDIA. They're to cancel the orders that they have. It's probably because of the trade talks that are taking place right now and these issues of national security that are playing out between the two countries. Jensen Huang just saying that, we can only be in service of a market if the country wants us to be, pointing out that he's disappointed, but that there are larger items to work out on the agenda between the Chinese and the United States. What do you say to American companies that do business in China, do business internationally, and end up getting hurt on the bottom line as a result of what we're doing right now?
Well, it's not provocations from the United States that have started that. I mean, if China wants to, begin a trade war or, make these relations more complicated, it's their prerogative to do so. But we have to face China very seriously, and we do. The administration and the Congress understand that China has been working for a long time now to become a peer-to-peer adversary with the United States, and we're in a race with them, frankly, in so many areas, in AI and the advancement of new technology. And China is not a fair trading partner. I mean, they're a communist regime. They steal our intellectual property. They have no regard whatsoever for U.S. trademark law or any of the other provisions that make for fair trade agreements. So it is not the fault of the United States that there are these strained relations. It is the fault of China. And look, there are.
All right, so Mike Johnson going the route saying, hey, it's not us, it's them. I mean, look, I think China's playing hardball with NVIDIA literally just because of these negotiations that are happening right now. Unfortunately, as for NVIDIA shareholders, that means that, Q3 is ending in a couple of weeks, right? Until they approve anything meaningful, you might not see that China revenue until Q4. So it is what it is. We're just gonna have to deal with it. The good thing is NVIDIA doing $54 billion in revenue in Q3 is still incredible. And you don't need the China revenue. It would be nice though to get the China revenue. And until Jensen resolves it, or until Trump resolves it with Xi Jinping, then Jensen's not going to get what he wanted. And that's why at that press conference he said today, hey, I'm disappointed at what's happening, but these guys have larger issues that they're waiting for. Jensen also is in the UK with Trump. Salesforce announced a $6 billion investment in the UK. Google announced a $6.9 billion investment in the UK. And then Microsoft announced a $30 billion, I think over 5 years investment in the UK. So you're getting a lot of these tech companies continuing to pour money into a lot of the investments that I saw was basically data center stuff in the United Kingdom, which is money they were going to spend anyway. They're just choosing to do it in the UK. And that's not too bad for US-UK relations in general, as these big tech companies are participating. Triple V, thank you for the $200 super chat. Thank you for being here, sir, and thank you for the $200 super chat. All of our portfolios are going to have a massive swing today, either up or down, based on what Powell says, including Mr. Triple V, who owns a decent amount of stock in some of these companies. And so every dollar move on the portfolio is going to be big today, given what Powell says. And again, I am more bullish than not that it's going to be an FOMC meeting that the market thinks is positive. Now, again, if we get down like 2% or 3% on the S&P, is it that crazy? I mean, we were literally at all-time highs, giving back a little bit of that. I don't think anyone can be that upset. It would be a little annoying because I know most people have done well over the past couple of weeks, but it is what it is. I just think that dip, but like, I don't know, dude, if HUD goes back to 100 after this whole S&P stuff, are people really going to fade that? If SoFi goes back to 22, are people fading that? Grab goes back to 550 after 3 days of closing at 6, are people fading that? Like, it's one of those things where if it creates an opportunity, I think people will jump at the gun, including Mr. Triple V. And that might end up being a attractive opportunity for a lot of people. Maxime says, I'm more stressed than my exams right now. Dude, it's kind of crazy that some of you guys have college and high school exams and you're keeping up with the markets, dude. If I was not keeping up with the stock market when I was in high school, a little bit when I was in college, realistically, by the end of my senior year, that's when I started caring more about it. But if I'm in high school listening to Jerome Powell speak and like coming home for dinner and from school and then telling my parents about interest rates, like that would be crazy. I was not that deep into it. But for those that are, you're probably going to be very, very rich. Swift, thank you for the gifted 5 memberships as well. Appreciate it. And thank you for the gifted 5 memberships. Okay, Duolingo. So this one had the DuoCon yesterday. I didn't get all the announcements. I know some people might have watched it. It's down another 5%. I mean, this thing is getting ridiculous. At this point, I'm thinking like either it's going to 0 or it's going to rebound to 500, or not 500, I should say, but like 350-ish. Like, I just think it's getting absurd, the price action of this. To give some context to my portfolio in the stock draft, Matt is number 1 at 24.83%. His biggest winner is SoFi, up 84%. His biggest loser is Dutch Bros, down 16%. I am 1 percentage point away from Matt at 23.19. My biggest winner is Nebius at 77%, which is lower than Matt's biggest winner of SoFi at 84%. And my biggest loser is Duolingo with 40%, which means I'm 1% away from Matt. And I've got something that's negative 40%, where the most Matt has on his portfolio is negative 16%. That's how bad Duolingo has been for my portfolio. If I had anything, if I had like a rock, if I had an NFT of a rock that that could maybe do a little bit better than Duolingo, this portfolio would be different. So realistically, this thing just needs to kind of recover. And I don't even know if that thing's going to happen, but you would think DuoCon, they announced some special LinkedIn partnership. They expanded into chess. None of it. The market did not care. The market did not care. Tanner's up 16%. Steve's up 4%. And then Chris right there is up 9%. So everyone's ETF is doing relatively well. It's just if I didn't have Duolingo, I would be first. And I don't know if Duolingo recovers at all throughout the next year, because we got about a year left on this to see if that happens. But I think the narrative issue on Duolingo, okay, so you're either in one of two camps. Either the narrative is so bad, you're like, hey, it's not a touch. It's not a really falling knife, because the knife is already like fell many times. Maybe it continues to fall, but it's like from 550 to 260, you would think, all right, the knife has fallen. And you're kind of just like, whatever, the narrative is so bad, I'm not touching it. Or you're like, dude, the narrative is bullshit. This thing is not going out of business. They're growing at 50% year over year. And this thing absolutely deserves a higher multiple than where it's trading at right now. And it's probably going back to 350. And yeah, my rant did that. Let's do a poll right here in the chat. I am very curious what people think on like if there really is any hope for this thing, because this is worse than Google this year, bro. Google's a $2 trillion. I mean, like a lot of us knew Google was not dead, but Duolingo, it genuinely feels like, is this thing dead? Duolingo, recovery to 400 by, let's call it mid next year, which would still be down from my price. I got it at 475. It was just such a bad pick. or it's done. What do we think? What do we think? I mean, this is just incredible how bad it's been, but it is what it is. Blame it on AI. Yeah, we got to blame it on AI. App 11 right here. That one's at 604. That closed above 600 yesterday, which was incredible. Again, another one in the S&P 500. And then Palantir 169, Tesla 415, and then NVIDIA 172. And I mean, you got to give a shout out to Matt's portfolio. The worst he has is Dutch Bros, down 16%. Which like everyone's going to get one stinker. And Dutch Bros probably recovers by next. I mean, I don't think this is going to be down 60. So even if Dutch Bros recovers and Duolingo stays flat, he's going to be up like 30, 34%, and I'm going to be stuck, or I'm going to need some of my other names to really perform. But I mean, the fact that you have one stinker and that one is probably just like a cyclical thing right now that's going to recover is pretty incredible. But Duolingo, I don't know. I really don't know if this one recovers. And my gut tells me it recovers because like it's too pessimistic for it to not to recover. But who knows if that ends up playing out. Now, take a look at this. This is Andrew Yang. He just launched a new initiative. I realized I would never be able to be in this initiative, but take a listen to what the former 2020 presidential candidate launched yesterday. I'm curious if anyone would be interested in joining this initiative.
Sure thing. So check it out. I'll use myself. I know I use my phone for doom scrolling and social media a little bit too much. But at the same time, I consider myself an effective in-touch individual and kind of need my smartphone and don't want to count how much data I'm using. So the way Noble Mobile works is that you pay a $50 flat fee for unlimited data. And if you use it up the wazoo, then you paid $50 and that's the end of it. But if you use less than 20 gigs per month, then we'll give you cash back in the form of an end of month payment, data dividend, we call it, of up to $20. And then any money we give you will then grow at a 5.5% interest rate annualized so that your cell phone plan becomes like a mini savings vehicle without you having to think about it or do anything. And so this way you guys
wander.
So what they're doing is they are paying you. It's called Noble Data, Noble Mobile. They're paying you to not use your phone. They're paying you to not use your phone. And if you use less than 20 gigabytes a month, they're then giving you back that money in the form of a data dividend to keep people not on their phones, but more into the real world. Yeah, first of all, to Austin's comment, why is this necessary? I don't know what Andrew Yang is doing. I'm like, some of this stuff to me seems pointless. Like, I don't even know why this is like even a thing. But number two, I just thought about it because like, dude, you could pay me $1 million to not use my phone. Like 20 gigs. I think I use 20 gigs every day of data. So the idea that I would not use that is probably hard to believe. But nonetheless, you do have some new initiatives about trying to get people to not use their phones, but I would probably fail. Anyway, here's what we got. Wednesday, September 17, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Fed FOMC day. And let's see what we got. NVIDIA, 173. That's down about 1.05% on the day after China said that they will likely be banning their companies from buying NVIDIA chips. I think it will be a short-lived ban, but that's why you got NVIDIA coming down. Robinhood goes green, 117.65. That one's not too bad. That one's up on the day. S&P also going green. All right, so a bit of a reversal from the pre-markets on the S&P going red. Now you've got S&P green. Grab right there, 609, down on the day, similar to how it was over the past couple of days. It opens down. The fact that it's down, but it's actually above 6, I think is just shows how the price action has changed over the past couple of weeks. But we're going to see if this one falls back below 6 or if this one is able to recover. SoFi right here, 2720. Google, 250, holding 250. Palantir, 167. That's down about 1.3%. Tesla, 416. That's down 1%. And then Hoodie, one of the only names that's green, as some of these other names go red. SMCI, that's down. Apple, that's up a little bit. Where is Rocket Lab? That was down 12% yesterday based on that $750 million equity raise that they did, 47.52. That's up a little bit, or mixed shelf offering, I should say. They haven't diluted by 750 million yet, but that's what got the stock to go down. CoreWeave, that's slightly down. Uber, that's down 2% on the Lyft Waymo partnership. Lyft is up 11%. It was up 20% in the pre-markets. Now it's up 12, so still a 12% day. Can't be too mad for that for Lyft, but that one is Up. Nebius, that was up 2%. That is now up 3%. Nebius right here, 92.70. I was speaking to a couple of Nebius people yesterday, and they're still buying. And they're saying this thing is going to 200. So I know it's really hard to buy a stock after a 40% run because it's like, all right, I missed it. But I mean, from a couple of the people that I talked to yesterday, they're like, no, dude, there's like this. If they get another deal like the Microsoft deal, that's just going to continuously increase. I mean, they were expected to do like what, 300 million in revenue, and now they're doing 3 billion for the next couple of years. It's pretty incredible, and this might be a candidate for 2026 for continued momentum if this one can hold on. Grab down 6%. All right, so now we're going to see this has happened 3 days in a row. This is the 4th day in a row where it goes up, it tanks in the first couple minutes of the market open, and then it ends up recovering within about 30 minutes. So we'll see if that recovery happens again today or if this one continues to stay down. But that one is selling off. Tesla right here selling off as well, 414 from 420. So that one's down. Duolingo again. How is that doing? 271. All right. So a little bit of a green candle from 268. Again, I'm not going to buy Duolingo because I just don't know enough about it, but I really don't think it deserves to be in the gutter the way it's getting hit because of AI. It deserves a little bit of a multiple compression probably. I don't know if it deserves to be at these levels. So we're going to see next earnings. They just got to deliver. And if they don't, it's probably going, below 250. But if they can deliver, maybe. I remember it was at 450 2 weeks ago after earnings because the earnings were so good. But then like the Apple AirPods came out and it just got hit. So we got to see with Duolingo. I ran right here at 36.23. That's down about 1%. D-Lo, I know this is a stock that Tanner's into now. That's up 1.54% or down 1.54. NVIDIA 171. NVIDIA continuing to get hit down 2%. S&P still green, but barely green. 64% of you, by the way, Duolingo is probably done. 36% of you said it can recover back to 400. Reddit, is that dumping? This one is dumping. That's down about 4%. AMD, that's down 1%. I would say everything's likely going to be red to flat until FOMC. Remember, FOMC is at 2:20. I'll be live. 2:20 Eastern. The announcement's at 2 p.m. The meeting's at 2:30. So I'll be live 10 minutes before. And we are going to see Hoodie, one of the only names that's actually green in the midst of all this. TFC, that's down. Disney, 115. That's slightly flat. Baba, it's had a hell of a run, 163. I think it hit 170 last night, so not too bad on Alibaba, 163.50. That one's holding up. And then you have Amazon, which I think is also still holding up right there at 232, even though it's down a little bit. Where's ASTS? This one took a bit of a hit. Also, the Trump ASTS down below 40 again. The Trump Bitcoin company, ABTC, went live yesterday. That stock is down about 1.54%. This is just another Bitcoin treasury. So that's what they're going to be doing. BMNR, that is down 1.7. Down 1.7. Again, the thing about BMNR, and I said it yesterday, and I really do believe in this, you cannot get too much FOMO when it goes up 5%, and you cannot have too much fear when it goes down 5%. And that 5% up or down realistically happens every single day in this name. So if you get way too much FOMO, then you probably buy in at a really crappy entry. And if you get way too much fear, you end up selling when it's like probably going to reverse because it's volatile. It's going to go up and down. This is the 28th most liquid stock on the day. It's the second most liquid treasury behind MicroStrategy. And, who knows? Maybe it might become number one. You know what I was thinking about BMNR, what they should do? They have like 200 Bitcoin on the balance sheet, 194. I think they should sell all their Bitcoin to buy more Ethereum. MicroStrategy right there, 335. Like, what's the point of having 194 Bitcoin when you could liquidate all that and get way more Ethereum for that money? So I know some people might get mad about that, but like, if the whole point is to build an Ethereum treasury, I mean, I feel like they should just get rid of all their Bitcoin and buy Ethereum. So who knows? Maybe that's a strategy they could deploy, but that would get them a little bit more ETH on the balance sheet. HIMS right there, 50.47. That's down about 1%. Uber 94. Baidu, some of these Chinese companies taking off. Wow, 5.9% on Baidu. This is basically the Chinese Google. JD, that one is up 1%. And then Baba, we saw, is also doing its thing. So you got, I guess, a little bit of a rotation into emerging markets. China's not necessarily an emerging market. It's just more international exposure. Emerging markets are more so Latin America, Southeast Asia, but international exposure is getting some momentum. Grab right there is still below $6 at $5.99. Sailor would ghost him if he does that. That's true. Sailor probably wouldn't be happy if if that happens. Tom Lee did take a picture with Sailor yesterday at the Bitcoin Advocacy Day in DC or something that was happening. So yeah, Saylor might not be the happiest, but it makes sense, right? Like what's the point of having the Ethereum on the balance sheet? Like there's no point. Or is the Bitcoin? Like you might as well just get rid of it. Is Neo running? Neo, I know last week it was, wow, across 7. This thing was at 5. It was really at 3 months ago. 712. Okay. So China's catching a bid. ELF as well, 147. I saw one of their press releases a couple of days ago that continues to give them. I think Chris has this in his portfolio. Yeah, he does. So we'll update the portfolio in 10 minutes of the stock draft. Chris does have ELF. He got in at 126 on ELF. So that one is doing very well for him. 147 right there is what we're seeing on ELF. Lyft is tanking. All right. Was that a short-lived pump? Still up 10%. I mean, it's not completely in the gutter, but definitely pre-market gains are getting a little lower. I ran right there, 1.25. Where's Bitfarms? I know a lot of people are excited about this one as the next big data center play, 282. A lot of people think it's the next Iran. I have not done some DD into it, but it was at $1 on September 5th. It's at almost $3 on September 17th. So you definitely have a lot of people getting excited about that one. Open Door, this one potentially is a candidate to run today, up 5% after the rate cuts. And we're going to see. Skrelly is officially short Open Door at 936. He initiated a short position yesterday. So we're going to see how he manages the short or if he continues to hold the short position. But yeah, he said he officially shorted Open Door at 936. He also said he spoke to a bunch of Open Door exports. I spoke with the first 20 experts on Open. Transcript available. Calls will continue. So I guess he's collecting some due diligence, and we're going to see what ends up happening there. SoFi right there, 27.29. Google still holding above 250. Again, JPOW is happening at the end of the day at around 2:30, or I should say in the middle of the day, not right now. So we do have a few hours until we get JPOW. Lyft pumped 30% because of the announcement with Waymo, autonomous ride hailing in Tennessee. Let's see a couple of these other headlines that we've got going on. NVIDIA right here, is that one still dumping again? The China headline. I mean, if it goes back to 165, I can't blame it. China headline, people will definitely be upset about. So it is what it is. I think it'll be a buy the dip. It'll probably take the semis down with it. Wow, Hoodie actually holding 118. Is Broadcom going down on this NVIDIA news? Broadcom's also down. AMD's also down. That one's getting hit. Also, NVIDIA got another order yesterday. It was a big one. Let me see if I can just pull it up. That was a strong order in the face of what's going on with China. Yeah, from the UK. 300,000 GPUs. 300,000 NVIDIA Grace Blackwell GPUs. Into the United Kingdom. So that one with their partner Nscale, that's just another 300,000 chips. I mean, it obviously does not feel like they're slowing down, even if the China stuff is not necessarily working out for them yet. Marvell, what's going on with Marvell? Are we green on Marvell? We are green, 69.39. Jason's back going long on Marvell. I know it disappointed everyone, falling from earnings from 80 to 61. He's back long, ultimately thinks it's a good company, and eventually they'll hit their growth curve. But that one is trying to recover. Grab right there did touch 6, back to 595. SoFi 27.11. Google 251. A lot of these I think are being controlled by algos until we get a JPOW answer. So if everything's going to be red or everything's going to be flat, then that's going to happen until 2:30, and then we'll see if there's a switch. Microsoft also going down on the day, 507. MicroStrategy 334. Palo Alto Networks 204. Grab at 595. Hoodie 117. Palantir 167. American Airlines, is that making a move? That one's up a little bit on the day. PayPal is up 2% as well. All right, so it's a relatively boring sort of action in the stock market until we get this news by JPOW. And I think we're not going to get anything different. I mean, and boring meaning it's red to flat. Tesla right here down about 2.45% as well. Not being able to make its momentum. BMNR, is that one still holding on? BMNR right here, 55.75. Okay, so here's a question. Are we hedging, or is anyone hedging going into FOMC? Is anyone selling calls? Is anyone buying puts? Is anyone just raising some cash? I mean, I have some calls on my positions, but nothing else too crazy. What are your thoughts on GME and their warrants? I don't know too much about their warrant structure. I do know their earnings were relatively decent, and they have a ton of cash on the balance sheet. It's not like a long-term investment I'd be in, but I mean, the earnings weren't that bad. So GameStop's not horrible. A lot of people ask me about would I buy Grab warrants. They are super cheap, but I'd rather just buy the stock because at the end of the day, the warrants imply a certain price by an expiration, which I think Grab can get there, but the stock I think is just not a bad bet if you think it'll get to that price as well. Mostly just waiting. Jonathan says just covered calls. Roger said I sold a put on Oracle. Roger, I think I called you Roger yesterday in the chat when you sent a super chat. So I'm sorry for saying Roger, but everyone got a good laugh out of that. Oracle right here down about 2% of the day. That's at 300. Margaret says she's setting some stops. Anand says raising some cash for a dip. All right, so everyone's doing a little bit of something. Gold, by the way, we hit 3,700 yesterday. Are we still at 3,700? Gold price, yeah, 3,700. Gold's not slowing down, dude. Same with silver, not slowing down either. It's quite incredible. Got the market rallying with everything else. Big Bear's down 4%. All right, so the reason Big Bear was up 15% yesterday is because of that politician buying $50,000 worth of it, and that was disclosed. So people jumped into the trade. Grab right there, back above 6. Don't know if buying it just because the politician makes sense, but if she's like a Nancy Pelosi, a pseudo Nancy on the come up, we need a new Nancy. Nancy's like what, 84 or something? How old is Nancy? She's gonna retire eventually. 85. Okay, so I don't think she's gonna be insider trading at 95. So someone needs to take her place. And we got to see who that's going to be. NVIDIA dumping. Are we below 170? Not below 170. Below 170 psychologically would be a little aggressive for NVIDIA. And that might allow it to really start coming down. So let's see if that ends up happening. Next decade. I know Matt Money is very bullish on that. He's buying it. I think Chris is also in this one. Next decade right there. Down about 1.2%. Goog's at 250. Apple, the pre-orders on the iPhone, guys, it looks really good. It looks really good. The report here from JP Morgan said iPhone 17 pre-orders show average lead times up to 4 days versus iPhone 16 cycle. Wait times rose 7 days for iPhone 17, 3 days for iPhone 17 Air, and 5 days for 17 Pro, 2 days for 17 Pro Max. The strongest demand is for the base iPhone 17 models. I guess we're in the upgrade cycle. I mean, I would have been buying the iPhone 17 if I didn't buy the iPhone 16. I was forced to buy the iPhone 16 because my iPhone 15 just ended up like really basically breaking down and just not charging and stuff. So I would have been upgrading as well, which means maybe it's this kind of 3-year upgrade cycle, and that's really bullish for Apple to finally get some new phones out into the world. And so maybe that's why Apple's getting some momentum as well. Coinbase, are we getting some green? Coinbase is slightly red. Is Duolingo tanking again? Yeah, back to 268. Dude, this is one of those investments. There's one of those stocks where you've got to either be super contrarian and go against the crowd. And I'm ready to go against the crowd on a couple of different names. I'm not ready to go against the crowd on Duolingo. I don't have the guts to do that. I just don't have enough conviction on it. But if you do, I mean, this one feels like it should be a recovery back to 400 without too much pain. But I don't know. We're going to have to see. And I hope it does for my stock draft. Anand says, I'm upgrading for the first time in years, currently on a 13 Pro Max. Wow. Dude, does anyone have like an iPhone 10? I know Chris still uses the iPhone X. Remember the iPhone X from 2017? Does anyone have one of those? Because like, obviously there are some people that just haven't upgraded for years. Josh says it's the orange color. The orange color actually did look good on the iPhone 7. I'm not going to lie. Like, it looked legit. It was a nice one to see. Maybe that's all they had to do. Dude, a bunch of you guys are on the iPhone 11. Holy, oh my! I would have. I need my phone to be fast, and I know with every year the phone slows down, and so the most I've waited is 3 years. iPhone 11 is like freaking 8 years ago. Okay, whoever said they have the 8 Plus is trolling. Whoever said they have the 8 Plus is trolling, bro. No one has the 8 Plus. That is wild, bro. You guys don't want a fast phone? 8 Plus, dude. Yeah, the battery, you gotta have to be charging it 24/7 to have an 8 Plus or even an iPhone 11. had the iPhone 6S until early. Okay, now you're trolling. That's iPhone 6 iPod Shuffle. All right. Well, it seems like a lot of you guys at least at the 12 or the 11. SoFi right there below 27. And that could be a big upgrade cycle as well. iPhone 11 Max. I just upgraded from the iPhone 14 Pro Max. Yeah. Last one I had was the 15. So that was, or I think it was the 14, but whatever one came out in 2023. I think that was the 15. Okay, cool. So AMD right there, 160. That's getting a little bit of green, getting a bit of momentum, but everything else is flat. Also, guys, I think we're streaming again today for Meta. So Meta is going to have their event at 7 p.m. Eastern. So I'm pretty sure I'll be live for that. And we're going to see what Zuck shows off, likely a new ecosystem with glasses. And that's going to be something that the market obviously cares about. And we'll see if that can also help Meta stock later today. Did the Bank of Canada cut rates today? Did that just happen? Or did that happen earlier in the day and we missed it? Bank of Canada, they cut by, just now, 25 bips. Yep, there you go. All right, Bank of Canada, 2.5% interest rates. They cut it by 25 bips. Hopefully, the United States joins them today. And we also get some cuts. But Bank of Canada is there. Obviously, this has been Trump's argument for the past couple of months now that every single major central bank is cutting except the United States. And it's time for us to do that. Where is Quantum? QBTS, that's up 2.7. Not bad. IONQ, that's up 1.6. And then you got Rigetti, Quantum making a move. That's up 1.4. Now, again, the IONQ CEO yesterday said that GPUs will be obsolete by 2027 and quantum computing will overtake as the dominating computing platform. I don't know if he's going to be correct about that, but he did make a pretty bold prediction live on Bloomberg yesterday. And, well, the stock is up, so I guess people believe him. IONQ right there, pretty monster move. I mean, this thing was at 40 on September 8th. 8 days later, it's at 63. So not a bad 25% move on this name. Canada promises to sustain economic growth and keep inflation under control while Ottawa removes U.S. import tariffs to reduce price increases. Okay, so looks like the Canadian relationship with the United States, particularly around tariffs, is starting to get a little bit of clarity, which is not too bad. ELF right here. Wow, 150. ELF getting a move as well. That's up 5% on the day. Do you own IREN? Yes, I have 100 shares at $28.90. Not a ton of it, but I have a little bit. Circle, is that one moving as well? Circle is up 5%. It's kind of weird. You wouldn't think Circle and ELF would move while a lot of these other high beta names are down, but I think everything's kind of in a little bit of disarray until we get what JPOW is going to say. The heat map for the day. This is what we've got. Let's pull this up and see what we're looking at. It doesn't look like there's any major trends. Yeah, it's NVIDIA that's taken the biggest hit. And financials are green, health is green. Amazon's that. Look, tech is red or tech is flat, and everything else is relatively green, which is not too bad. Anything on VG? Let's see. Is that one moving? VG right here. That one's flat. I don't think there's any major updates that I saw. Materials Corporation, MP Materials, that's up 5%. This one had a monster move all year when they got Pentagon and Apple to invest in them, which was great. And then Bitfarms, that one also up now 1%. Puma surges after media report investors preparing for a takeover. Is Puma even public, bro? What's the ticker symbol for Puma? Puma stock. No, this is OTC. This is OTC. I don't think that, yeah, this is, these are OTC ADRs. That's up 10%. I don't think you can publicly trade that. But that one is up on the day. Defensive rotation, it kind of feels like that. But then again, you have some random names that are green, right? That are not defensives at all. But obviously consumers, financials, industrials going green, utilities would make you think it's a bit more of a defensive rotation. Yeah, Puma is the clothing brand. Puma is the clothing brand. I haven't shopped at Puma in a long time. I think they have some big celebrity endorsements in the NBA, but outside of that, I don't think they trade publicly right here. SoFi 2707. Where's Zillow and Opendoor? Again, today's going to be a big day for them. Zillow is up 4%. Opendoor is up 7%. All right, so Zillow and Opendoor, again, those are your rate cut proxies. And Rocket Mortgage, which doesn't get as much coverage, but that one's up 1% as well. All three of those potentially, as rates come down, you might get a little bit of a surge. Really, you look like a Puma guy. Do I? Do I look like a Puma guy? Royal Caribbean, are the cruise lines getting some love? That's up a little bit. Carnival, that's up a little bit. And NCLH, that's up a little bit as well. All right, so you got some of that. So Chipotle said they're buying back $500 million of their stock. This thing has been kind of in the gutter for the past couple of months, but I guess that's helping a little bit. Let's go to the stock draft, see how that is updated. Matt's up 24. I'm up 22. Steve's up 4. Tanner's up 16. Chris is now getting close to being up 10%. He is up 18% on ELF, 43% on Oracle. Still down 20% on Novo. So if that could reverse, that would really help him. But Matt right there up 24 and I'm up 22. I'm now down 43% on Duolingo. Visa, still red on that. That one's down by about 3%. S&P, still 660. Estee Lauder, how's that one doing? That's up 2% as well. I think Burry's out of this. Burry was like all in Estee Lauder, and he diversified into a bunch of other names. Got heavy into UNH, which, wow, Hoodie making a little bit of a move here on Hood. 118, trying to get to 119, 118.80. UNH right here, also green on the day, 340. And Hoodie about 20 cents away from 119. Oh, Rick, dude, the story on Rick is absolutely crazy. It's down 8% on the day. It was down about 20% yesterday. So Rick is a parent company that owns a majority of strip clubs in the United States of America. And it's called RCI Hospitality. Apparently, the auditors were given $5,000 a day at RCI-owned clubs for lap dances. And the company bribed those tax auditors to kind of not look at the parts of their books that weren't as friendly for the IRS with these free trips to the strip clubs and free lap dances. So this is an incredible story, bro. Absolutely incredible. Strip club giant RCI Hospitality charged with tax fraud and bribery of tax auditor. I wonder what company that tax auditor works for. What do they work for? Ernst & Young, Deloitte, KPMG? I mean, I wonder what consulting firm, what PwC has to have that conversation with one of their auditors and be like, really, dude? Really? You looked over fraud to get a lap dance? Seriously? That's what you did? So just saw the story yesterday and I was like, this is just ridiculous. Got to sample the product. Yeah, I mean, well, they definitely sampled it. 5,000 a day, dude. Goodness gracious. Where do I apply as a tax auditor? Yeah, can AI replicate that? Can AI replicate overlooking the books? I mean, that's crazy, dude. Absolutely crazy. But yeah, RCI Hospitality. I mean, it might be a good buy the dip, to be honest. I'm not buying that dip, but it could be. You never know. This is a bad thing. This is like SMCI, right? It was bad. They were cooking the books and then they moved on and maybe you forget about it. The problem is, though, the reason I wouldn't buy the dip is because at the end of the day, if there's tax fraud, RCI is going to have to pay a ton of money, not only in fines, but they're going to have to pay back taxes. So it's only a buy the dip after all that's resolved. And that might take years for it to be resolved. So it's as down as it is, it's just might not be the easiest thing to touch. Snapchat right here. Is that moving? Snapchat 791, finally making a move back to $8. It's been stuck below $7 for a long time. Quantum again, making a move as well. I don't know what the catalyst is for Quantum. D-Wave right there up 7%. I don't know if it's what the IONQ guy said yesterday. I don't know if there's any announcements. I don't think there's anything, but all of them moving in unison. IONQ up 3%. It's kind of weird, right? It's on a day of JPow talking, you get Quantum that jumps 4%, but then you got NVIDIA down. Just a bunch of different random things happening. And when JPow speaks, I think we'll see if there's any unity to kind of how the market's going up or down. Bitmine right here, 5650, that's up 1%. $7 billion investment into quantum and AI. Oh, that's from the UK stuff yesterday, right? That's I think that was I think I remember that headline with Microsoft. I think they mentioned quantum and AI investment. Yeah, that might be the reason. That might be the reason. Microsoft. Yeah, there you go. Microsoft's the main headline on this. Microsoft pledging 30 billion in UK investments for quantum computing, civil nuclear energy, and AI. Okay, there you go. That's your run. That's why it's making a move. ELF right there, upgraded by Bank of America to 160. Okay, that one's making a move as well. Open, are you squeezing on Open? Open is about to hit $10. That's going to be your squeeze. That's up 11 right there, 994. Google 251, AMD 160, and then the S&P 659. All right, so Skrelly's down on the short as of now. We're going to see if he doubles down or if he does. You know, the CEO of Open Door actually responded to him on that tweet and said, hey, we should talk. So maybe the CEO changes his mind and maybe he just says, yeah, I'm out of it. Or maybe he doubles down. So we are going to see later on that update. Chris says, how can you audit someone without making sure the product is real? They were just doing their job. They were thorough. They were definitely taking advantage of making sure they could understand if the product was real. That is for sure. Tesla right there, 416. That's down one. Hoodie rejected at 118.97, and then Palantir pretty much flat on the day at 168. StubHub IPO today. That is correct. I'm not buying that, but they're pricing it at $23.50. So if you're in StubHub, then you will get your shares probably in a few hours. We'll see how that one plays out. Figma is up 7%. Dude, this is weird. Quantum's up, Figma's up, Nvidia's down, Google's flat, Apple's flat, Hims is, after that FDA warning, is kind of flat. Circle randomly is up 7%. Like, why is Circle up? AppLovin, new all-time highs. AppLovin probably deserves it as they continue their momentum. But you got a lot of random moves happening back and forth in the market. And I think a lot of that is just waiting on anticipation of what JPAL is going to say. Duolingo's still down. Disney's flat. Archer, the United Airlines partnership yesterday, still gets that one just above 9, below 10. Coinbase 327. The Q's at 590. And then Rocket Lab up 3. Rocket Lab trying to recover after they announced that dilution, which from 53 to 47 is not even that big of a deal on Rocket Lab. So I think it was pretty opportunistic for them to announce it. And that stock now at 48. BM&R, yeah, that one's still moving. IBM, I mean, they partnered with AMD last week, and that kind of was a particularly, from my understanding, quantum partnership, which helped it. BM&R looks like she wants to break 60. I don't know when, but it looks like she wants to break it soon. And as long as ETH doesn't tank, I feel like the momentum's there. 56.82 is what you have on BM&R. And then D-Wave. This one's the biggest mover of the day, it looks like, right there. 20.7, 9% up in a day. Market cap $7 billion. This one continues to really get. IONQ also acquired a company, I think, 2 days ago, which led to them getting some more momentum. That's up 2.5% now on the day. Let me see if we get any macro news right now. I know we have Jay Powell in a few hours. No, it doesn't look like we get anything too crazy yet. Oh, we got housing starts at 8:30. We already got that. Housing starts came in at 1.3 million. Street expected 1.37. So that came in lower than expected. That's to be expected because of the housing market being frozen right now. But about a 700,000 miss on houses, which is not too bad. A guy on X has 6 million IONQ shares. Dude, IONQ cult is strong. I mean, they are heavy and they believe in that stock deeply. I mean, it's pretty heavy. I've noticed, like, those people genuinely believe and see the future. And, you know, they got a CEO who's able to communicate, which is probably what's helping. S&P is still flat on the day. Hoodie, again, rejected at 118, right here at 117. Grab, breaking back up above 6. Volume on Grab. Brookfield also up a little bit on the day. Grab, 21 million in 30 minutes. So, again, the volume continues to be pretty aggressive on grab. AMD right there, 160, SoFi 26, and then S&P 659. Yeah, there you go. Chris is in it with us, bro. Chris is in it. BM&R. Chris, you have the options though. So even if you don't have as many shares, your options should create a ton of leverage if this thing really does move. I think Chris's target is 100 by next year. And I think a lot of people have even higher targets than that. So, I mean, bro, people love Tom Lee. If Tom Lee ends up like getting this thing to 100, I mean, there's a lot of people that are going to make a lot of money. I mean, he is going to solidify a lot of his, I guess I would just say reputation, credibility, if he can get this bad boy to 100. And he doesn't really have to do much other than buy Ethereum. Realistically, his thesis on the macro trade of the decade around Ethereum being correct just has to play out. And if it does, yeah, people are going to make a ton of money. It's going to be very exciting. Chris says 100 by end of year. All right, so Chris is more bullish than me. I mean, there you go. 100 by end of year. Someone just bought $4.1 million worth of calls on Open Door for $9.26, $8 calls. Someone also bought $28 million of stock yesterday at like 2 p.m. Dude, it's taken a life of its own. And obviously, when you have these many people interested in the name and you have a new CEO, I mean, fair value, market cap, none of that stuff matters anymore. Unless they have a crappy earnings, which, we're going to see if they can turn around the earnings. But right now, retail is in control of this. And even JP Morgan, I think they put out a note yesterday and they said, hey, we are not like the most bearish on Open Door. We think that the new CEO could change things around and we actually think it could be a good opportunity. And so when you get the toots that start piling in along with retail, like obviously, it could really take off. Now, again, rate cuts, I don't know if that's necessarily just straight up bullish because the margin on their spread, which is why they lose money, I don't know if that increases just because you increase the volume of homes that are being sold. That's kind of like the hardest problem with their business model. But if they completely pivot, then they get better margins. The stock probably goes higher. The question becomes, what is the pivot? Maybe it's Zillow. I don't know. Maybe it's like a Zillow type of competitor. Maybe it's more of a marketplace, but I think you got to give it a chance to the new CEO to see how this plays out. They said no more realtors. Yeah, I mean, they want to get rid of the agent model, which I don't know exactly how you do that. But then again, I think that's why they have this new CEO to come make a plan to figure it out. And so I think you have to give them the next few months to see how it plays out. ELF right there, 150.50. Not too bad. Is that 52-week highs on ELF? Yeah, 52-week highs on ELF. It was at 120 on January 1st or 130. So that one's making a move. And then Bitcoin also slightly green on the day at 116. Yeah, they are going to cut 85% of the workforce. I saw that as well. I mean, that's cutting, 1,000 people. So that'll increase their margins immediately. I think that's actually, I don't know exactly what the employees at Open Door do or like why they're as valuable. But then again, if you cut that many of people in the workforce, you got to have enough AI to replace what they were doing. But I think that's like possible. It's just, if you're an employee at Open Door right now, it's got to suck, right? You got to be thinking every day, holy crap, I'm going to get an email soon if the board is serious about cutting 80% of the workforce. What if it's 50 bips and a bullish Fed? If it's 50 bips and a bullish Fed, everything's running. And like if it's 50 bips, and remember last September, it was either September, October, and we were debating 25 or 50. And there was a 50-50 chance on both. Right now it's like 90-10, 10% being 50, 90% being 25. But last time I ended up like making my official prediction 25, even though my gut was telling me 50, and then it ended up being 50 and everything rallied. If that happens again today, I think it would be even more exciting because there's only a 6% chance for 50. So I really doubt that's going to happen. But if it's 50 and it's dovish, it's got to be dovish. You can't be hawkish. You can't be like, hey, the economy is crashing. We got to start cutting rates like it was COVID. Then I think we rally. But if it's 50 to the tune of, hey, the labor market's really bad and we're scared about the economy, we might end up having a pretty big sell-off. So I think the most realistic expectation is 25 and the market chills out, which would be pretty good. My gut says today 25. My gut says today 25. He's going to be like, we actually came up with a new strategy, one basis cut only. Dude, if Jay Powell pauses today, it would be the ultimate troll. And it would be quite hilarious. But Don't know if that's going to play out. BMNR down from 57 to 55.72. All right, let's get a little bit of an update on what's going on with rates, the Fed, and what we kind of think today could have end up playing out.
Restrictive. This is what they mean, right? That it's still higher rates that Americans have to pay that is holding back the economy, which is why ultimately they are set to cut today, because we're seeing some weakness in the unemployment market, and it gives them some room.
You've
to
made
make
the
it
point
easier.
many times, and others have as well, and I'm sure we'll even discuss it the next hour. But I mean, the short end, we'll see the impact, but there is a steepening of the yield curve right now. And we have mortgage rates lower than they've been in a handful of years, but nonetheless, the expectation, perhaps particularly in the longer end, that we're going to see a significant reduction in rates for those who want to try and buy a home.
Well, that we could. That's what happened last year when they started cutting rates. We actually saw rates move up. The only thing I would say is that this time around, we have seen this move lower in the 10-year yield just in the past few weeks or so.
Mm-hmm.
I mean, we were closer to 4.5.
That's true,
right? And we moved down to 4%.
Who was it who told you they
already
thought we were going to get to 5? Wasn't that
before we break under 4? That was Bill Demchak.
Demchak from PNC. That was last week.
That was last week. And by the way, there's still a risk of that. Let's see what happens. Just because the Fed starts cutting, to your point, doesn't mean that market rates adjust lower. But so far they have, in anticipation going in. And what's different this time than last time is the weakness in the labor market. And that's what the market has sniffed out. Now, there are all sorts of things that matter, like the fiscal position, debt dynamics, and that could keep rates high. Higher inflation outlook, that could keep, the long end high. So that's definitely a risk out there to talk about.
We're still running enormous structural deficits. Right. We have a national debt now, 37.5 trillion, I think, is the latest number. It's not insignificant in terms of interest costs, to your point.
So that's what could keep long end a little bit higher. Although I would say that the tariffs have been bond friendly because they are bringing in a lot of revenue. And if they continue to stick,
they've helped us. I mean, I thought it was interesting.
The tariffs are bringing in revenue, and it's almost like the bond market doesn't care about the tariffs anymore. Like legitimately, you don't see tariff news create that much fear in the credit markets. So it's one of those things where if Trump can get rates down, get more trade deals, and the tariff revenue actually helps pay down the debt, and we don't have massive inflation because of tariffs, I mean, that could be one of the things that sets up 2026 to not be as bad of a year either.
That the debate around the potential rollback of the tariffs as a result of that court ruling, and now it's going to go to the Supreme Court. The main course you heard from the administration was deficit reduction. It wasn't necessarily manufacturing jobs and other things. It was what this would do to our fiscal position as a result of.
And I think that's been the surprise in the market.
Significant numbers coming in.
That's been the surprise, right? It's why bonds have been able to rally, because as inflation sort of became on the back burner and not the main worry, it was we're bringing in a lot of revenue to Treasury coffers, and that's actually good for the deficit. But what's so fascinating about today, David, is not just what they do with rates, but the palace intrigue around the drama inside the Fed. I mean, the actual key voters, will we see dissents? Today's also one of those meetings where we're going to get the dot plot, so where Fed members expect rates to go. We could see things all over the map. Let's just look at who we're talking about, right? At the voters in the room. We never do this, but okay, Powell, we know gets a vote. We pretty much know he's in the cutting camp, right? He signaled that at Jackson Hole. We're good on that. John Williams, New York Fed president, also, he spoke at the Economic Club in New York 2 weeks ago, seemed open to a cut. Michael Barr, remember him? Vice chair of supervision on banking. We haven't heard from him since, I don't know, in months.
Well,
we don't know what
down
he's
from
going
that
to do.
position, right?
But he's still a governor, so he gets a vote.
Yep.
Don't know where he is on rates.
Bowman took that position.
Bowman took that position. She's a voter too. She dissented last time in favor of a quarter point. Will she and Waller go for a half-point dissent this time? Could we actually see dissents in that direction? More voters. Susan Collins. Okay, so she spoke in Jackson Hole. She said it was too early then. That was 2 weeks ago to decide. I would guess that she was signaled some openness to a cut, that she's a cutter. Lisa Cook, we have no idea. We didn't even know if she was going to be in this meeting. Now she is, thanks to an appeals court ruling. We don't know if she's a cutter or maybe a dissenter in favor of staying. Goolsbee, who speaks a lot, feels like he was too early a few weeks ago to say whether he would cut in September. Feels like he will be paying attention to labor market and be a cutter. Philip Jefferson, we do not know. He's the vice chair of the Fed. We haven't heard from him. For as much as these people speak, they haven't really tilted their hand as far as whether they will cut. Why? Because the jobs data was really recent.
Some of these names I know, and others.
And I think Trump's counting on a lot of them to end up going in his direction. Hoodie back to 118. But at 2 p.m. we'll get a better understanding of what ends up playing out. Reminds me of NFL pregame talk. Dude, it's literally NFL, NBA pregame talk. And it's just some dude who's going to announce if they lowered interest rates by 25 basis points. Like, it's the most nerdiest thing on the planet. And all of us are just like waiting to get his answer and waiting to see what happens. It's hilarious. It's like legit. It's like an event that all of us, it's not even earnings. It's just like a guy who's going to loosen monetary policy. Imagine telling your friends that you go out with, yeah, at 2:30, I'm going to be joining a lot of people to figure out if monetary policy is loosened. Like, it's ridiculous, but nonetheless, it is hilarious. Do we have someone's birthday in the chat? Do we have someone's birthday? I think we do. Shout out to Single Handed. Is that your birthday? I don't see your name in the chat, but it looks like everyone's wishing happy birthday. So yes, happy birthday to Single Handed at Single Handed in the chat. Yeah, happy birthday. Hopefully you get 25 bips of cuts for your birthday. 85? Single Handed, you're turning 85 today? My goodness, amazing. Absolutely incredible. All right, happy 85th birthday to you. And hopefully a nice birthday gift is J. Powell lowering some of these rates. Ryan says, I hit 39 on the 20th, if anyone cares. Ryan, happy birthday to you. 20th is what, in 3 days? All right, so happy almost. Dude, I'm telling you, there's going to be a lot of birthdays coming up in October in particular. A lot of birthdays coming up, so happy birthday to everyone. And if it is your birthday, then definitely let us know. Lisa says, Amit, please say happy birthday to my lovely daughter, Yessa. Yessa, happy birthday to you. Your mother, Lisa, is in the chat because she wants to make sure that she can give you a good life. And in order to do that, she needs to know if the Fed's going to be loosening monetary policy today. So happy birthday to you, Yessa. That's incredible, dude. Yeah, we're going to get a lot of birthdays soon. I mean, my birthday's in October. A lot of people will be having birthdays. I think it's one of the biggest months for birthdays. Grab right there, just above 6. Google, just under 250. SoFi, under 27. Meta right here, 772. And then Amazon, 231. Hoodie, just below 118 at well. Okay, some of you guys are getting your shares of StubHub. Let me know if you guys got the allocation. There's like a few of you getting one share. Looks like no one's getting a ton of shares yet. But this might be one of those that ends up being like those one share things in the IPO. I don't know how much access retail has to this IPO. This one seems a bit oversubscribed, not as aggressive as like the other ones, but still oversubscribed. 14 shares, 10 shares. Okay, not too bad. Yo, I definitely have to get a Halloween costume. Wait, is Halloween on a weekday? October 31st is, yeah, it's a Friday. All right. What do I dress up as? I got to do something fun. I wanted to do something last year, but I think I don't know why I didn't dress up last year. Maybe Halloween was like on a Saturday or something, but I absolutely want to dress up this year. We'll figure something out. What do you think about Nubank? I like it. And the move has already kind of been made from 11 up to almost 16. So I don't think it's like a screaming buy at 16. But before earnings, it was at 11.50. That was kind of your entry. So I don't know if it's the best first reward right here. But their growth is incredible. And it doesn't look like that growth is slowing down. Dress up as a Robin Hood? Maybe I should. Maybe that would be a good one. I haven't gone through Delo yet. I know Tanner's into it. I really just haven't studied it at all or like even looked at it. So I'm going to try over the weekend to get a better understanding of that one. Amit, I need to meet Triple V. Was literally one of my nicknames. My first and last initials are VVV. Wow, that's super dope. He was at the Hood event. Some of you guys got to meet him. And so it was pretty funny when I was like, hey, this is Triple V. I think Batty was with me when I was like, hey, this is Triple V. And she was like, oh, you're Triple V. Like it was hilarious. So yeah, some of you guys got a chance to meet him. Open Door, is she running? Open Door 1019, she's running 15%. All right, so this is obviously in anticipation of these rate cuts. And if J. Powell gives us a cut, then it might continue to fly higher. Maybe it's a sell the news on the cut because it's already up 15% before the rate cut. But obviously Zillow, Open Door, a lot of these proxies. Yeah, even Zillow making a move right here. Rocket Mortgage as well making a move. Or waiting based on these rate cuts. Nebius, is that one green? Nebius is still green. Up about 2%. Amit, I have $60 covered calls for Figma. Expires 9/19. Any strategy? Where's Figma? I would 55, 76 next. Yeah, I wouldn't do anything. 9/19 is in 2 days. Figma's at 55. Unless you're really stressed that Figma will get to 60 by Friday, I think you're in a good spot. And if it gets there on Friday, then unless it blasts through 60, you can roll it for next week, try to get to 61, 62, and I think you'll be okay. But yeah, I wouldn't stress that. If it was at like 57, 58, I would roll it. But at 60, you've got some room to work with. Google right there, just below 250 now. On the Oscars down another 5%. This one, again, I still don't fully understand why they raised money. 1704. I'm just not in it because I don't understand the healthcare subsidies or any of that stuff as well as I should. But that one looks like it's continuing to get hit. I have BM&R leap calls for 35 strike for January 2027. Any thoughts? I mean, if you think BM&R is going to be above 37 in a year, then I like those leaps. Well, technically it has to be above 35 plus what you paid for them. So if you paid $20 a premium, then they have to be above 55. I mean, like when you buy a leap call, you have to ask yourself, do you think the price you're paying for the leap plus the strike price is enough for the underlying to be meaningfully above for you to make a profit? That's a simple question you have to ask yourself. And yeah, I think by 2027, BM&R is probably above, most likely above 75 to 100 if Ethereum plays out. But if it doesn't, then, time goes against you. So you just really have to be confident on that overall thesis. QBTS continuing to move as well, not stopping. There you go, 2014. That one's still up about 6% on the day. All right, so we got the Fed meeting in a few hours. Don't officially have the announcement yet. That's going to be at 2 p.m. And let me see right here. We have Bank of America CEO potentially talking about rates. We'll see if we can pull that up and see what he is saying. My daughter just had a baby talking about birthdays. I love it. Congratulations. Congratulations for that. We all need to have more babies, bro. We all need to Japan is in a real different issue, bro. Japan, 3x the number of deaths versus births. And a very aging population, which means you need people to take care of them. The Japanese government is definitely freaking out, and they're trying a bunch of new initiatives, but we need to have more babies. Nebius right there, 91.24. Batty says, is it bad I want equities to drop on the FOMC cut announcement, then bounce back later in the week or next? No, I think that's, if you have covered calls this week, that's probably the most optimal scenario to take place. And if you have cash ready to load up on the dip and you've been waiting for a September dip, I mean, for anyone who's been waiting for a September dip, you had one day, September 1st. And then you got one day after that where it was a little weak. Other than that, it's been 17 days of no dip. So maybe this, which ironically might mean that you don't get a massive dip if everyone's waiting for that dip. If you're waiting for Hood again at 100 and it gets close to 107, you might just bite the bullet and say, all right, whatever, I'm buying it at 107 instead of waiting for 100, given it was at 97 2 weeks ago. So yeah, I don't think it's crazy to wait for the dip. I just wonder if we're going to be getting a very aggressive dip. Baidu, shout out to Dougie. Dougie bought Baidu after listening to the BG2 podcast with Gensler. Gensler did a big China podcast. I think it was 2 weeks ago. And they mentioned Baidu. They mentioned the cash on hand compared to the enterprise value. It felt undervalued. And there you go. China's taken off. Baidu, Baba, JD, Neo, all of them have been getting a ton of momentum, which is not too bad. I would have had babies if I didn't have to work 50 hours a week. Yeah, I mean, that's the argument that has been kind of universal by a lot of people, especially in America, which is just kids are expensive. It's true, kids are expensive. There's definitely an ethical way to make the argument that you don't want to bring a kid into the world if you can't take care of them, right? But regardless of that frame of reference, the underlying issue is there is a population problem globally that's happening. And in the age of AI, where everything gets more efficient and productive, and like, you know, like you start to wonder, all right, it's like, what's going to happen to humans? It's one of those things I don't think anyone fully has an answer to. Yeah, Zocold, you know, Zocold has like 3 of those kids. So kids are definitely expensive. Bro, kids are not expensive. The wife is. I would imagine both are relatively expensive. I have 750 calls on Grab for January 2027. What do you think? Well, I've got 2,500 calls for Grab for January 2027. So I'm bullish. In general, the options market on Grab is really beginning to heat up. I mean, yesterday there was like 200,000 or 170,000 calls that were bought and like 10,000 puts. The volume today, yeah, look, the volume today, dude, is 23,000 calls, 2,000 puts. I mean, these calls are just being traded like crazy. People are just buying them up. They could be selling them as well, but the point is there's a lot more options activity. And again, I still don't know what's caused this, bro. I don't think it's me. I don't think it's retail. I really don't. I think that like this type of volume doesn't just come out of nowhere. I feel like there's something happening that we don't know about. But holding above 6 after 4 years to me is pretty incredible. And hopefully that can continue. My kids' water polo league costs $400 to $600 per month. Water polo league, dude. That's some expensive ass sport. I did like basketball. I think my mom paid like $100 for me to play in a basketball league. Goodness, dude. $600 a month. Yeah, I mean, there's definitely a level of expensiveness to come in with having kids. That's a car payment. Yeah, that's a car payment, bro. That is a car payment. Pouncer is expensive, but we love it. Same with wives. That is fair. That is fair. SoFi right there, $26.95. NVIDIA, $170. So NVIDIA not really tanking, even with the China news today, which is also pretty good. See if I can pull this up right here. Okay, so we have a couple updates on the Fed. Let me see if I can get this up and get it ready. Oh, wow. Chris Patel, this guy, bought another 90 spreads. He said he wants to get 500 of them. My goodness, dude. Average cost 390. This is 75-100, folks. 75-100. So he's betting it's 100 by January 2027. And this is a $25 spread. His average cost is, call it 390. So 25 divided by 390. It's a 6x. If it gets to 100, it's a 6x for Mr. Chris Patel, 640x. Or not 640x, but 6.4x. 640x would be aggressive. All right, there he is. I would join him, but I'm in the stock already, and I'm in at 46. So I don't want to get the spreads if I'm already in the stock. But there you go. You got Chris Patel hopping in to BMNR. Doug says the crypto winter could demolish it. Do we get a crypto winter though, dude? Let me ask that in the chat. Do we actually get a crypto winter? Like, given how institutionalized crypto is, and maybe this me asking this question itself is why we get it, but do we get a crypto winter next year? Which technically 2026 we're supposed to, right? It's the 4-year cycle. You're supposed to get a winter next year. And then you got Tom Lee saying 200,000 for Bitcoin by the end of the year. Like, I don't know, bro. I kind of like, what is the logic of a winter is a cyclical time where activity in the crypto ecosystem dies down, kind of like a bear market, and therefore everything sells off. Why over the next 4 years do we have to have that? Like, is there some law in the crypto universe that says it has to happen? No, it's just based on historical precedent. It's like, okay, well, historically, we have not had BlackRock. We have not had Michael Saylor. We have not had Tom Lee. We have not had Fidelity, ARK, all the ETFs. There's like 10 more of them that I'm not mentioning that are buying up Bitcoin and Ethereum. We have not had the stablecoin revolution that we're seeing. We've not had the Genius Act. We've not had all of these things over the past basically 20 years of crypto really going through these cycles. and we've not had retail understand crypto as much as they understand it now. Like, why does there need to be some massive winter if all that is different? I don't know. I feel like it doesn't have to happen. I feel like it just doesn't have to happen. And again, the ETF inflows on Ethereum and Bitcoin have been exceptional. August was $4 billion just for ETH. So yeah, the administration has never been this pro crypto. And so I think that's, a reason to be excited. Your thoughts on Jeremy potentially shorting Hood? Jeremy wants to short Robinhood? Really? I'm hearing that for the first time. I think that it could work if we head into a bear market. Obviously, right? Because trading volumes go down, every one of Robinhood's metrics will take a hit, and the stock probably compresses, right? The problem is, you got to really be confident we get into a bear market, number one, which I don't know if anyone can have that type of confidence unless he's seeing some macro data that I'm not seeing. Number two is, why would you short a company like Robinhood? Like, their execution, bear market or bull market, is going to be exceptional. So I can understand not wanting to buy at these levels. Shorting is like you're definitive that it's going down as it's getting into the S&P 500. That to me is a little, I don't know. I wouldn't do that trade. But, obviously if we get a really bad crypto winter, that could definitely mess over Robinhood. Now, if Bitcoin goes to 200,000, like Tom Lee's saying, Robinhood's going to do like $1 billion of revenue in 1 quarter off crypto. So like, I think there could be a middle in between the extremes, but I don't think shorting it necessarily would be the best idea. Chris said if he came to Hood Summit, he wouldn't. Yeah, dude, that Hood Summit was different, bro. I'm going to write up a lot more thoughts on that over the coming weeks, but I wrote something out yesterday, and I think it goes to $1 trillion. I think over, the next 10, 15 years, this thing goes to $1 trillion. And my logic was really simple. Product velocity, 10 to 15 new products per year. Vertical velocity, you have to enter 2 to 3 different markets every year, prediction markets, mortgages, banking, etc. And then geographic velocity, market velocity, 1 to 2 new geographies entered per year. Singapore, all these different parts in Southeast Asia they're looking at. India, I think, would be a massive market. So if they every year for the next 10 years can introduce 10 products, 2 new verticals, and 2 new geographies, they already entered in the UK in 2023. They expanded Europe in 2024. Like, I think it's just going to compound to hundreds of millions of people getting financial services from Robin, which would be relatively bullish. The bear market was his thesis on using Hood puts to hedge. Yeah, look, if we get into a bear market, but it's not just Hood, it's everything, right? If we get into a bear market, like, every stock gets hit. This is the funniest thing when people say, oh, I will get into this stock as a hedge in a bear market. I'm like, dude, in a bear market, if you're not in Verizon, like anything you're in, Grab, Google, SoFi, every multiple compresses in a real bear market. If it's like a fake, 1 to 2 month decline, everything recovers. But if it's a real, if it's 2022, what stock survived 2022? Tell me. Everything took a shit. Everything. And every time you thought there was a little bit of recovery, if the macro was still to the downside, everything ended up falling until everything bottomed in December of 22. So you could kind of short anything at that point. And I feel like it would be pretty bad. Tesla, this one is still at 412. And then Adobe right here, 362. That's up a little bit on the day. 2.8. Yeah, I mean, you definitely want to be short freaking BM&R in a bear market. Like, that thing is going to go to the gutter along with Ethereum. So I think if you have heavy money in the market, you have to have a thesis on us not being in a bear market for the next couple of years. And I think that's what I've learned the most from reading a lot of these like bullish analysts, the Mike Wilsons, the Tom Lees of the world. I'm trying to understand their thesis. And their thesis is this is going to go on for the next 5-6 years. And you either believe that or you don't. That doesn't mean there's not going to be hiccups. But if you're not heavily in cash, you have to believe this party continues. And you have to have a good enough logic to believe why it continues. And, we've been talking about it for a couple of weeks, but I think it really does continue. It's not going to easily get that in. Oh, wow. Gary Gensler is live. Let's see what the former SEC chair has to say. They're talking about ending quarterly earnings as well. Let's see and get his thoughts on what he thinks about this.
That's removed during his time at the SEC under the Biden administration. Joining us now, former SEC Chair Gary Gensler. Welcome. It's good to have you.
Great to be with you, Sarah. David, to be back.
So you do not agree with the president that companies should move toward reporting less frequently to think bigger and longer term?
Look, he's had this position since 2018. He's been clear, and the SEC under Paul Atkins is going to take it up, as you say. I think if the investor base, the buy side, want to keep this, they have to speak up. For me, I think transparency helps markets. If we go to only twice a year instead of 4 times a year reporting, the markets will be a bit more volatile. It will be harder to understand what's happening in the markets. And so, yes, I'm supportive of. It's worked for 55 years in the U.S. We've got the greatest capital markets.
But we don't have long-term investing. At least that is, I mean, we all know the whole period of even a mutual fund is very short, and companies are constantly complaining to me as well that I can't get a long-term shareholder base.
David, I'm going to take the other side of that.
Please.
I think that this phenomenal economy that we have is in part because of that long-term investing in the public markets and in the private markets. Look at all the spend right now, measured probably in the $200 to $300 billion a year on artificial intelligence by these big mega cap companies,
Yes.
right? They're doing that for the long term. They're not earning a bunch of profits in 2025. So I think it's an important issue, focusing on the long run. But I think the U.S. capital markets actually do that reasonably.
There's also an argument that companies aren't going public as much because there's just so much paperwork and disclosure, and the pressure around the 3-month earnings is otherwise unnecessary for them to grow and think long term, especially smaller cap companies.
Sarah, there's where I will agree somewhat with the corporate executives. There's a cost to corporate disclosure. The overall thing about corporate disclosure is it creates a big public good that the economy works and functions better. So again, the president's been clear. He's been clear since 2018 on this. Paul Atkins and the SEC will take it up. Investors and the buy side, if they say, hey, this is really important to institutional investors as well as everyday investors, and the media, if you find it really important, you need to speak up on the other side. That's how public debates happen.
And we may very well have it. And you could imagine the investors will be on one side of that debate, as you obviously say. I'm curious, Gary, your thoughts about the private markets, because we just saw a graphic. IPOs are up this year, but I mean, the numbers are staggering in the private markets. The valuations, the ability to raise money, OpenAI, what that company's been able to do. I'm curious as to your perspective on it. It doesn't seem like that's going to change anytime soon.
I don't think so. And I think it's been one of the strengths of our U.S. capital markets that we have that lively competition between the public markets and the private markets. And we as a nation have benefited from everything that's happened from the venture capital field and the private equity field. But you do have greater transparency in the liquid markets. And thank God there are still the liquid markets at $60 to $70 trillion in the U.S. I would note our capital markets, our liquid equity markets, are 4 times bigger than all of Europe. So I'm not sure
we have one
why
company
we
whose
want to
market,
adopt.
we have one company whose market cap is larger than every market, basically, other than I think Japan. That would be NVIDIA.
And China. So, but you're absolutely right. NVIDIA.
Look, it's he's not wrong about this. I know everyone hates Gary because part of the reason we have liquid equity markets as well is because we're embracing innovation. And Gary, for 4 years, refused to embrace the crypto innovation, which one could argue was a net negative on our equity markets. But he is right in general that, look, we've got very liquid markets. You can get in and out of these markets like within milliseconds. That's because there's liquidity. That's because there's people willing to take a risk with their capital in these equities. And I would imagine that requires disclosures and actual like quarterly disclosures where we get to know what's going on with the company. So I asked the question on Twitter yesterday, and the overwhelming amount of people said they want quarterly, not semi-annually. So I just think it would suck for most people, definitely for the public, if we only got reports twice a year. But who knows? It's Trump's SEC, so they might end up going the route they want to go down. So we're going to see. But Jay Powell today is going to be the most important thing to see kind of how companies can even react going into Q3 if we get this FOMC meeting. CT10, thank you for becoming a channel member. Appreciate it. Thank you for being here and for becoming a channel member. Hoof, thank you for the $20 super chat. God bless the dads and moms in the chat. How blessed are all of us to share wealth ideas together and watch stocks with you. Yeah, I mean, you know, if you're a parent in the chat, which I know a majority of you guys are, it's pretty incredible, right? Because a lot of you guys probably are investing for your kids at the end of the day. It's one of the most intrinsic human reasons to invest and even want to make money is to give it back to your loved ones. So, and this is why the bull years are always special, because making money in and of itself is so hard. Making money is really hard when you're taking a allocation of capital into a company that, you know, anything could happen, right? It could go up or down. So like you're already taking a risk by not exchanging your time for money at a regular job where it's more defined, but rather your risk for money, right? Your risk for reward with money being allocated. And then it's even more special if you have a bull market year where you took on so much risk, but then that risk really paid a dividend and then you're able to use that money to help your families. I mean, it's obviously very, very special. And you don't get that every single year, but the past couple of years have been good. And this is why it goes back to sort of my broader macro thesis for the channel over the past couple of years has been, this is one of the greatest times to be an investor in history. And I think the party of this being the greatest time to be an investor continues for the next 10 years. I mean, like it's not that hard to see what's happening in AI. And we've done a lot of work to see, is it bullshit or is it real? And every day we gut check, is it BS or is it real? And if it continues to be real, it pays to be net long. Especially when companies are reporting quarterly and they're actually giving you good answers every quarter. Which matters, dude. It really does matter. And I don't think it's because anyone wants to like make enough money to buy a yacht. Like whatever level of income I've been able to achieve over the past couple of years, which is more than when I was broke in 2022, it's just helped me with basic things. Like I don't stress about getting a coffee, right? Like I don't stress if I have to order something from Amazon because I need like I don't stress if I have to take an Uber. Like just like those basic things where you have to pay 40, 50 bucks and you're like not stressed about that 40, 50 bucks. That is where I think real like freedom comes from. Not having the money to buy the yacht. I mean, that's just on a whole different level. But for the average person, just not having to stress about the simple day-to-day bills. I mean, that really just, it allows your mental to be in a different space. And you know, usually that comes from being able to allocate capital in a meaningful way. Speak for yourself. I want 2 yachts. Yeah, I'm still in the camp of not buying anything crazy with my money. I don't think I've bought anything insane for the past like 5 years at all. I cannot name a single purchase I've made that's like ridiculous. And I don't think I ever will. Not buying a watch, even though I know watches can appreciate. JTB, thank you for the super chat. My son is turning 12, so I now have him sit on the market close for 30 minutes every day. That's incredible. That's incredible. I mean, again, these kids, they're going to be so rich if they're actually pounding right here down 3%, if they're actually learning and taking away insights at 12, 13, 14 years old. I mean, by the time they're 23, 24, they're going to know so much about the markets. And hopefully it instills passion in them to get excited about the markets. Because at the end of the day, all I'm doing is communicating what's going on in the ecosystem of investing. But the reason you guys are here is because you have that same passion. And to get that passion into a kid at a young age so that they can go on and really, you know, do their own thing when it comes to investing with whatever money they make on the side as they get older. Most human beings never get that investing bug where they want to listen to a guy talk about easing monetary policy for 40 minutes. And if you get it, it's not the worst thing in the world. Yeah, but admit you are paying for a hair consultant. Okay, so that's true. I am paying for, I don't even know how much I'm paying, bro. She hasn't even given me the bill. I have no idea how much. What if it costs like $5,000 or something? There's no way, right? It's got to cost like max like $500, right? I should probably ask her how much it costs. Let's see what we got to do. Deacon says, who's holding Netflix? I purchased 100 shares in 2011. Average is $33.55. When do we get a stock split? You know, I've been asking that question for Netflix, Costco, and Meta for a long time. I don't know, dude. I really thought they would split. One of the reasons I bought a little bit of Netflix before earnings is because I thought they would split. And they did it. And then Meta, they didn't split either. I mean, I feel like it should happen soon. But if you got your shares at 33 average, then you're probably going to be getting a lot more shares because they'll probably do a 10-for-1 split when they do that. I have my 10-year-old daughter watch your show, and she enjoys it as well. She loves investing and watching her account go up. That's so cool, dude, bro. That's so cool. Yeah, Mercado Libre also needs a split. It's so cool, dude, just to like, even if your kids are playing with a couple $100 and they're just seeing this. My uncle does that with his son, who's I think 12 now, my cousin. And I remember in India, he had a little account. He bought some SoFi, bought some Palantir, and like it's the sense of ownership that's so special. HSBC downgraded grab. Yeah, we saw that today. I mean, I don't know, dude. I don't think it's that big of a deal. I think some of these banks, see, the problem is some of these banks, their price targets are so low. HSB had a 620 price target. Obviously, that got blown through yesterday. So now they have to say, hey, it's above our price target, blah, blah, blah. Now we want you to hold it. Don't buy it. Like, this is where you get to see which banks actually are bullish. Because the banks that come out and say, no, you got to buy into the strength. This is the breakout. This is the movement. It's happening. It's like, this is the story. Versus the banks that are like, we'd stay away. Don't touch it. That ultimately has an implication on kind of where the stock goes. But if JP Morgan, that is correct, that they said upgrade to 720, then you have some of these banks saying, actually, no, we think this is going a lot higher. And it probably shouldn't be stuck. NVIDIA below 170. All right, NVIDIA's getting hit. NVIDIA's getting hit before J Powell. Palantir also getting hit, down $6 today, down 4. The Googs is down 1. Hoodie's down 0.3. Reddit's down 5. Amazon's down 2. CoreWeave down 3%. Coinbase down 2. Little 1045 slam, potentially, is what we're seeing. It looks like that's the case. J Powell speaks at 2:30 Eastern. Yeah, take a look at this. Financials, consumers, consumer services, utilities, and defensives are green. Pretty much everything else is red. Majority is being tech. That's red. Majority being tech. That's red. Jersey Mom says, I've shared all my financial knowledge with my 20-something-year-old son and daughter. They're actively investing. Their future is bright. Thank you for sharing your knowledge. I've heard that story from a couple moms, actually, that were at the New York meetup, that they watched the stream and they got their kids into watching the stream. And even if their kids don't watch every day, they like keep up with it and try to take away some knowledge. It's really cool, dude. It's really cool. Most people in their 20s do not give a shit about investing. They care about it like literally anything else. And it's like money's not even enough to motivate people, because money is just like it's whatever. But like the process of ownership and autonomy, all that, those are like really intrinsic, valuable lessons that it's hard to get a kid to be excited about that. But if they are, it's pretty exciting. All right, so NVIDIA again is tanking, down 3% because of this China stuff. Jensen today commented, I wonder if we can get a video of that. But Jensen at a press conference did say he was pretty upset, or disappointed is the word, on what's going on with China and the US, but he understands. So yeah, that one we're just gonna have to wait until we get updates from China. But until then, it's likely gonna be a little ugly. Elaine says, my son told me he grew up following in his dad's footsteps, and now at 41, he follows in mine. Made me feel proud just as a housewife all my life. Wow, that's special. I mean, obviously, if your husband, Elaine, was kind of the man of the house, teaching your son about money, work ethic, all that stuff, and you were managing the house, now as you've become an investor and your son is following in your footsteps as an investor who has done pretty well for herself on Palantir, it's really cool. It's really cool how much knowledge you can bring down to your kids as well. I'm 27. I got into investing thanks to you 2 years ago. It's never too late, too. That's the other thing. It's really never too late. Sometimes people think it's late. It's like, it's just not. Dude, my sister, okay, this is the funniest shit ever. My sister, open door, by the way, this one is green as everything else goes down. So I guess, again, rate cuts. This is either going to be a sell the news when we get the J Powell cut, or this is going to rip even further. And I don't know. It's up 15% before. So maybe that just rips, or maybe people take profits in anticipation. But this one definitely having one of the better days. as we're waiting for rate cuts. My sister calls me yesterday. Again, I don't live at home anymore, right? So she can't come into my room and talk to me. She calls me yesterday and she was like, so like, if I wanted to like quit my job, I would be okay, right? And I was like, what do you mean? She's like, if I like legit wanted to quit, could I like survive for a year? And I'm like, well, why are you asking? And she was like, well, I just looked at my portfolio and it's at a new all-time high. And I'm just like, I just want to know, like, if I had to quit, I would be okay, right? like, I don't think you should quit, but like, if you had to quit, yes, your portfolio has reached a size where theoretically, based on the amount of income you're generating per month with selling off, like you could survive. You would be at a minimum for a year, probably even longer than that, but you'll be good. And she's like, okay, because I fucking hate my job now. It's like, and she has this like she has this conversation like every couple months, but she was just like, I absolutely cannot stand my job anymore. She works at a school district, and you know, someone probably pissed her off really badly. And she was just like, she never looks at her portfolio too. She barely opens Robinhood, but I think she opened it for the first time in 2 weeks, and it was up a lot because Hood got into the S&P and like Grab's been doing well. And she's like, okay, so if I really wanted to quit, I could quit, right? I was like, yeah, I mean, theoretically you could. Or you could at least take a break for a couple months and get a new job and just like leave a toxic work environment if you think that, you know, you're not being treated in the right way. And so it's funny because like she's not going to quit, obviously, but the whole point of that story is having something on the side that makes you feel like you have the autonomy to have a second choice and you're not wedded to some boss that's like treating you like shit and forcing you to do stuff that you just, you know, you don't really want to do in that environment just for a paycheck. It's really liberating. It really is. And it's one of those things that takes time to build up, but once you feel it, it's hard to have the same mindset of going back to normal, thinking that, you know, you just don't have options. 53% of you said we don't get a crypto winner next year. So it's about 50-50 on the crypto winter argument. Maybe you sell monthly options on your sister's account. I usually sell weeklies, but yes. She has no idea what I do on that account, but I manage it every week. And she's not actually going to quit. But it was, you know, it was one of those things. You had a shitty day at work and you just start thinking, like, worst case scenario, if I did have to quit, would I be okay? And if she didn't have her portfolio, no, she can't even ask that question. It's like, no, bro, you got to get to work. Like, you can't quit. You can't do anything. Like, there is 0 second choice, you know, because her savings definitely would not have been enough to, you know, allow her to quit over the past couple of years. Like, you need that capital to compound. You can't save money. You got to save enough money to invest the money to have even the mindset of thinking I could be okay without my job. And it's tough to do it without that. What's your percentage cut? I do not take a percentage cut. I do it because I love my sister. I would never charge her to manage her thing. I'm just so happy she let me freaking manage it like a year ago. It was literally a year, around June of 2024. I was like, please just let me manage it. So I'm happy she just let me do it. Salesforce right here. Okay, so Steve is really bullish on this name. Again, we've seen Benioff get into these public fights with Palantir. I think Salesforce is cheap. I was talking with Jason about it yesterday on Technical Tuesday. He thinks it's pretty cheap as well. The question is, will they have a narrative that allows them to grow in any meaningful way? Same thing with Adobe, super cheap. I mean, like, you cannot deny the fundamentals on both these names, but they're not growing top line. And Benioff keeps saying, well, we don't need to grow top line because we're doing 40 billion in revenue. And that's fine. But like, if there's no massive AI growth accelerator, which he keeps talking about AI as this big growth curve, but then there's 10% growth, which yes, they don't have to grow 50% like Palantir, but 10% growth in the world of AI is just not that exciting. I think that's why the street's not giving Adobe or Salesforce a premium. So I don't know, dude. I would like, if the question is, hey, gun to my head, do you buy Salesforce? I think the answer is yes, because it's just too cheap. But if you ask me, you know, is this the best opportunity in the market? I don't know. I think BM&R outperforms Salesforce by the end of the year. Like, it's just like there's more volatility, there's more of a narrative, there's more growth, there's more liquidity in a name that's moving. Whereas Salesforce, every quarter, it's decent results, but it's not like, oh my goodness, this is like a company that has to be in part of your portfolio. It's just not. Which is why I think it's not moving. Workday is coming back today after the Microsoft deal. Yeah, they got a deal yesterday with Microsoft. That one now up 8% on the day. This one as well has not really been. Actually, the Open Door CEO tweeted about Workday, and he was like, why is their software so shitty? Workday right here, down about 5.7%. I asked you guys yesterday on the close how many of you guys use Open Door, and like almost 80% of you guys were like, I use Open Door, not Open Door, Salesforce every single day. It's like a lot of you guys use that software, which just goes to Jason's point of it's so saturated now. It's hard for them to find growth when they're like already everywhere. Now, AI should be unlocking that growth opportunity, but it's not showing in the numbers. It's just not. And so it's hard to imagine that there's going to be this like massive growth argument. We use HubSpot. That's another one that's public. HubSpot 508. That is also up 1%. Jose just messaged me something. He said, watch this when you can. The link should be at the timestamp. Let me see. Okay, so he said on August 10th, I said something about NVIDIA. All right, so I'm going to go to the clip. Let's see what he says. Is it tinfoil hat by Jose?
Tinfoil hat moment here by me right now. So in the past few weeks, we've heard the China state media has been kind of pushing against NVIDIA chips, saying that, look, the H20 has a form of backdoor. It's a way for the United States government to kind of spy on the Chinese people. Now, I think the state media over there is going to be saying, look, not only are they spying on the Chinese people, any Chinese company that's buying AI chips from NVIDIA or AMD are directly supporting the US government, because pretty much it's a revenue share, right? So I'm not saying it's gonna happen, but I wouldn't put it off the bat where China governments go, you know what? For our national security, there's no reason for us to fund the US government. There's no reason for us to get the watered down chips. It's not like we're sending the best chips. We're sending them weaker down chips. For us to get the weaker down chips, while we might not have a true competitor, there's a company like Huawei or some domestics that could provide some solutions. Not a true solution, but at least some solutions. So it would be wild, and I'm not saying it's impossible for China government to kind of throw the reverse Uno card and say, you know what? Maybe we don't need your AI chips that badly.
That's pretty much what happened today. Shout out to Jose. I mean, China banned the NVIDIA chips today. Now, again, I don't know how long that ban is going to last, and I think Trump will be able to. Trump said he's talking to his G on Friday, which is a couple days from now. So hopefully Trump can get them to be like, hey, guys, like, chill out. Like, we don't need to go this far. But yeah, that was the headline today. And that's why NVIDIA is down 3%, because China tells tech firms, as per the FT report, to stop buying NVIDIA's AI chips. I mean, it makes sense that Jose made that prediction. He is studying NVIDIA day in and day out, and he has been for the past like 4 years now. So it makes sense that he could tell that China was probably on that trajectory to at least be a bit more hostile towards NVIDIA. Tesla's still holding above 414 on the day. NVIDIA now back to 170. Yeah, they sent them side by side with the Baba chip. Same thing with Huawei. I mean, look, it's not as good as Blackwell, but obviously China would love if it has a chance to get back up there with NVIDIA. What would you say the amount you need in your portfolio to quit your job? We asked this question a while ago. People can put in the chat what they think. I think the answer realistically, like, okay, there's a couple tiers to the answer. The objective answer, in my opinion, is 5 million. Like, I think, like, again, I'm being a bit conservative here because, like, I don't know, dude, is 100,000 the new million? Like, it's just, I don't think $1 million is enough to say you can quit your job, unless you live in a place where your rent's like a couple thousand a month and your costs are low, whatever. But like, to give up all the security of a job and realistically live off the portfolio, I think it needs to be up there. Yeah, this was the number we came up with last time, 2 to 5 million. That's the number we come up with. Like, realistically, if you have 2 million, I think you can do it as well. But super safe, straight up, I'm never going to work again, I think it's 5 million. On less than that, you obviously just, I mean, like, you could probably retire off 3.5 million, right? Like, you could. It's just you have to have a strategy to grow that every year and to pay for your expenses every year off of whatever 4 or 5% yield you can get from that. Especially if you're giving up all the security that comes with a job and health insurance, all that stuff. So I don't know. I think around that 2 to 5 million mark is not crazy. But yeah, it really matters where you're. I mean, if you're living in Alabama, I mean, theoretically, who knows? You'll probably retire off like 750,000 or something. But if you're living in New York, I mean, I don't even know if $1 million is going to cut it. Like, it's just a different world. Same thing with San Francisco, right? So, but I think around that range. Now, 10 million to me, for sure, you're set. But I think it's 5. Yeah, in Thailand, you got like $5,000. You're good to go. You're good to go. I'm in Brooklyn. It's ridiculously expensive. Yes, it's up there. See, Derek, someone asked this question on the live stream on New Year's Eve, and Derek was in the chat watching, and he called me up the day after. He's like, "Bro, what are people saying?" He's like, $1 million and you can retire? You know, Derek's 55. He obviously has, you know, more than $1 million, and he works his ass off every day. You know, like the rent is due. So like when you get to a certain stage, also you kind of just like don't want to lose it and you keep working. But for those, so he just couldn't believe that some people thought $1 million was enough to retire. It's like, world's expensive. It's only going to get more expensive, and you have to really secure a high level of assets to even think that retiring makes sense. And having cash flow every month from a job is special. Now, obviously, if you could replicate that on your portfolio with day trading or selling options, again, day trading is more risky. Selling options to me is less risky. There is a way to use that 2 to 5 million to be able to generate enough income to not have to work, and then use that income to still compound the portfolio. But you got to really have a plan to be able to get there. If you don't know your number, you are doing yourself a disservice. Got to have a retirement AUM and cash flow goals. That I 1,000% agree with. I think everyone should have their number. You know, the first time I learned about the concept of a number was Breaking Bad. It was Walter White. Jesse asked him what's his number to like officially quit selling meth. And I believe the number, correct me if I'm wrong, was 737,000. 737,000. He's like, once we make 737,000, he can pay off all of his bills and he's good to go. And it was a 747. I think it was 737. But then, you know, Walter made more than 700,000, and the number started changing, and he got addicted to the process of making money, and he had more expenses to deal with because he kept killing more people, and he had to pay other people to shut up about the killings. So, you know, it's like you add more money, more problems. And so I think it just constantly changes as you evolve in life as well. Yes, we are doing FOMC live. It's at 2:30. It's at 2:30 for FOMC. I'll be live at 2:20 though. Okay, that is not a spoiler, okay? That is not a spoiler. Like, if you know Breaking Bad, you know the guy kills a bunch of people. Earn in dollars, spend in pesos. I mean, again, if you move and you have a lot of money, that definitely accelerates the ability to have less money work for you. Sam says, Amit, I'm in college. I love the channel and love the community. Sam, thank you for being here. And thank you for caring about the markets while you're in college. It will definitely pay off for you as you get out of college. Dude, college is very interesting. I think I've showed a couple of charts over the past few days, and I've seen a bunch more about new grads and their jobs, their job ability, their ability to get a job in college. I mean, it's pretty aggressive to the downside in terms of declines. And you got a lot of people that are in college that are just like wondering, hey, you know, what's going to go on in the job market? And I think the only two things you can prepare yourself for are A, being AI savvy, so that every company knows that you can bring a level of productivity to them that's reasonable enough for them to pay for. And then 2, begin owning equities and let the compounding begin at a young age. But there's definitely a lot of different questions about new grads and what they're getting from their degree. I really wonder if a liberal arts degree will matter in 10 years. I mean, already we're seeing that the value of it is starting to not be as aggressive. Like, is it really going to matter when an LLM knows everything and anything about the world artistically, right? Of liberal arts and gender studies and sociology, like any job that would employ you because of that degree, I wonder if they would just use an LLM to be able to do whatever level of consulting or sophisticated research or whatever that's needed. Even stock market research, a very quantitative thing, LLMs are starting to do. So like, do you really need a research analyst to help you research a stock, or can an LLM do it for? Like, I really wonder what degrees have market value. And that goes the same for the STEM degrees, like computer science. Does that really have value in 10 years if you get a degree in comp sci? It's a very interesting question. I think it boils down to creativity is like the moat whether you're STEM focused or more liberal arts. Like, can you be creative enough to offer value to an enterprise, either for yourself if you're an entrepreneur or to a company? And can that creativity generate them an ROI enough for them to pay you? You still need people to know how to begin to ask the right questions. Yeah, that's fair. But I wonder when we achieve AGI, which, by the way, I forgot to mention this. This was on the docket. Elon last night was talking about how Grok 5, now obviously Elon's talking his book, but still, it is going to achieve AGI, the quickest before everyone. So he posted right here that I think XAI has a chance of reaching AGI with Grok 5. Never thought of that before. The reason for that is because Grok 4 just smashed the AGI benchmarks, achieving even higher score than its previous high with open program synthesis. No other model even comes close and has not passed Grok 4 previous raw performance. Currently, Grok is more closer to AGI than any of the other models. Now, obviously, I'm assuming Meta and OpenAI have something to say about this, but like, when we actually achieve AGI, will we need someone to even ask the questions? Will we need that human in the loop? I don't know, bro. Will you actually need a lawyer you have to pay $500 an hour for? Like, you're going to need a lawyer, but will you need to ask every single question to that lawyer so that they get more billable hours? Like, I mean, these are really, really important philosophical questions about the state of work over the next 10 years. But you had Sam Altman the other day come out and say, I think AI will create more jobs. And so maybe he's BSing and trying to just get us to believe that AI is not going to take over our jobs. But if he's right and AI does end up creating more jobs and it's not as bad as we think, and you get massive deflation because of AI, which means inflation is not an issue, and you get rates coming down, and you have earnings that are good because of productivity margins, and you have a thriving stock market with a bunch of new companies going public with amazing business models that are super high margin because of AI, like, next 10 years should be, and you've got crypto continuing to do it. Like, next 10 years should be some of the best years to be an investor. And there's a lot of ways that all that stuff doesn't happen, but if it does, then maybe it's not the worst in the world. Here's Dan Ives talking about this NVIDIA stuff this morning in regards to what's going on with China.
But have you heard similar things coming out of China that they already have chips that are at least comparable? Maybe not at the exact same level, but comparable.
Yeah, Frank, they're comparable. Like, I'm playing Bethpage Ryder Cup in September. I mean, the point is, like, NVIDIA is years ahead of these other chips. And look, that's the reality, right? I mean, there's some grandstanding going on there. And that's why when you look at these Chinese tech stalwarts, they want that NVIDIA chip. That's the new gold or oil. And that's some of the challenge that Beijing's going to have here. Remember, Trump administration knows the biggest chip on the poker table that they have are the NVIDIA chips.
All right, we're going to go to our Eunice Yoon live in Beijing right now on the CNBC Newsline. Eunice, good morning. Can you share with us the latest that you're hearing there in China?
Frank, what we see in this FT report is that China's cyber watchdog is ordering local companies not to use an advanced chip by NVIDIA that's used for automated manufacturing. This is called the RTX Pro 6000B. The newspaper says that this is because the regulators want Chinese companies to use similar chips that are produced by Chinese companies, and this would include Huawei. Jensen Huang on a trip in Beijing introduced this chip in July, and what's interesting, I think, is that this report follows news earlier this week when regulators had said that NVIDIA violated antitrust law, and it also comes after we've seen similar pressure by the government to dissuade Chinese companies from using.
So again, this feels more like negotiating than anything else. And hopefully it doesn't last until Q4, because then guidance is not going to be as good for NVIDIA. But I mean, we got to see what Trump can do when he talks to Xi on Friday.
Industry and the domestic tech industry?
Yeah, and she was making great points in terms of for the domestic players. Look, this is bullish for Chinese tech. And it's part of our view. You know, we're bullish on Baidu, because what this means is that, look, even when it comes down to it, they are going to get a significant share of what's happening in China. But look, this AI revolution, it's not just U.S. It is in China. NVIDIA clearly is going to play a huge role here. But this is very positive for Chinese big tech. Those stocks are going to be up today.
For people listening right now, looking at Alibaba, those shares about 2 1/3%. Baidu up about 8.5%. PDD Holdings up about 2 1/4% right now as well. So seeing some upside moves when it comes to those names. I want to shift gears just a bit. We have a lot of U.S. tech leaders in the United Kingdom with the president talking about investments just across the board. So I think I have a question for you similar to the one I would have had for our UK reporter, but we ran out of time. Why the UK? Why right now? Why all of a sudden?
Look, I think if you clearly see like they're trying to plant the flag, right? In terms of like the view that if you have an opening for AI, and that really has not been the issue in Europe, you're going to see companies like, you look at Google, you're going to look at Oracle, Microsoft, and others. I mean, everyone's trying to figure out who's going to be the one that gains share there.
And they're investing over 42 billion as per the reported number in the UK. Here's Gary Cohn, one of the National Economic Council directors or former directors, his thoughts on what's going on with the Fed today.
Pretty baked on 25 for today. But as we look forward into the end of this year and the beginning of next year, or even through next year, I think there's a lot of variability of what people are thinking about the potential outcomes for interest rates. There's a lot of difference of opinion in the economy, what's going on, inflation versus unemployment, the two factors that the Fed deals with. So I think what Powell says today about how he's looking forward, how that's going to influence him, and how the other governors in there sort of plot what their forward views are is going to be very interesting. And I think we're going to get more dispersion than we're used to getting.
Agree. I mean, that makes it so interesting. The market is telling the Fed, worry about unemployment and keep cutting rates. Do you agree with that? That's
Look,
what they should do?
They have a dual mandate. So at the end of the day, the dual mandate is stable prices, which is inflation, and full employment. So if they're following their dual mandate, they have to, by law, worry about the unemployment rate in the United States. So, and we've got a bunch of interesting phenomena, I think, going on in the unemployment rate.
Yes.
So first of all, the denominator is changing. Remember, we've got over 80,000 people in this country every week that turn 65. That doesn't mean they leave the workforce. I didn't leave the workforce. So people don't leave the workforce when you turn 65. But if you just keep elongating that, as people are turning 65, people are turning 66, 67, they are starting to leave the workforce. So the denominator of people actively in the workforce, then you take the immigrants that have been taken out of the workforce. The denominator has come down. So at the exact same time, we're seeing unemployment rates go up. The amount of people that are unemployed because they're eligible is going down. So that's an interesting factor. Number two is, I think a lot of this unemployment is being caused by companies. We came out of COVID in an unbelievably tight job market. I would even say that companies were hoarding employees at the time. No one wanted to let an employee go because they were worried that they couldn't rehire them. So companies were willing to carry excess labor costs at the time. Today, I think we've almost flipped that 180 degrees. Today, because input costs have gone up, they've gone up for a variety of reasons. Labor costs are one, but tariffs are definitely feeding into input costs. Companies have switched from that hoarding employees to working with as few employees as they possibly can. So companies are trying to maximize their returns by minimizing their labor cost. And I think that's going on. So the combination of fighting inflation and unemployment, companies themselves are a big factor in that, because they're not passing price along and they're fighting price with cutting down labor costs. There's a interesting dynamic going on here.
And it's a hard dynamic to fully understand, right? So basically he's saying that companies are not putting the price on the consumer, they're cutting labor. That's not the only reason they're cutting labor. It's not just because they want to save on prices. It's also because AI is making them more efficient. We've seen countless examples of that over the past couple of weeks. NVIDIA right here back over 170. And so you're getting labor market weakness, not only because of general market weakness, but because you might not need 15 consultants anymore. You might not need any of them. And so they get fired. And so then the question becomes, okay, the labor market weakening means we need to get more rate cuts to stimulate the economy to get people to hire. The existential problem here, which gets a lot more philosophical, is, well, what if these companies, it's not about the rates coming down for them to hire more people. It's about AI being so productive for them. They don't need those people at all. Now, granted, if rates come down and they grow their top line, then eventually when you grow, you probably need at least some new headcount. So that could increase the ability for employment. But that is something, I don't know, Besant or Trump or how they're going to navigate this. It's weird, bro. How do you navigate like corporate earnings going up because of margins going up, but margins are going up because labor is coming down? And then in general, if labor is coming down, grab right here, down 6%. The economy, theoretically, goods and services shouldn't strong in demand if there's not that many people that have the disposable income to buy all these services because they lost their job. So it's one of those things where I wonder in 2026, how does it end up getting resolved? Is there like some migration into new AI jobs that are like, again, really productive for people, but then you have a lot of people that probably are not fit to be in those jobs because they've been doing something their whole life and that just completely switched as they got fired. I don't know. I just think at the end of the day, you still have to own equities because they're going to be the biggest beneficiaries of how this ends up playing out. But that is one dynamic in the labor market that I think definitely we have to see how this all plays out. Maha, thank you for the $5 super chat. I have a Tesla covered call strike 392 expiring this Friday. What would you do? I would roll it now that Tesla's at around 415. If it's this Friday, I'd probably roll out a couple months and get you to like 430, 440. Again, you have to ask yourself, do you want to keep the shares? Do you want to not keep the shares? You might even want to roll it next week or 2 weeks out at 400 if you don't think you can hold 415. But if you think Tesla's like able to maintain its momentum of 400, I would roll it out a couple months, get to like 420, 430. My dad actually had like a 350 covered call 2 weeks ago, and he rolled it out to like 400 for January next year. I think 420, something like that. So, and he doesn't really care about keeping the Tesla shares, but he thought I might as well just let them get sold at a better price. Now, Steve also has a decision this week, and I think Steve's going to let his shares get called away. We'll see how much Steve actually loves Tesla or not on Friday. But if he lets his shares get called away, then they'll be sold around 260, 270, and then it's going to put the capital somewhere else. Grab right there, 594 to 6. Again, maintaining that 6 level, which is not too bad, and it's holding up. We got to see today what happens with rate cuts and if that helps. Any opinions on FNMA? Not many. I know a lot of you guys are interested in this one, or people have been interested in this one. The Federal National Mortgage Association. It's up 320% year to date. I think the rate cuts should help them because the volume of mortgages should continue to go higher. But I mean, it's already made a massive move, up 3x year to date. So it's like, I don't know. This one, you had to buy OTC. It wasn't just available on Robinhood. And a lot of people, when Trump said he wants to reform the Federal Housing Administration, they got excited about it. I don't know if 300% though, if that's the best risk reward right here. Yes, 2:30 Eastern, he's speaking. 2:30 Eastern. He is speaking. And that's why all of this red that we're seeing, even if it's slight red, it either goes to deeper red or it pivots green after he talks, or really after 2 p.m. I mean, and then, whatever he says will get the market to move as well. But I don't know. It could also just, maybe we end up flat for the day. Maybe there's nothing new for the day. And that's it. But I think there probably will be a move. Again, we shared the chart yesterday. JP Morgan traders are expecting a pretty aggressive move if there's a 25 bips cut that's dovish. That'll be S&P up 0.5%. If the Fed pauses, they think the S&P is going to drop. And if the Fed cuts 50 bips, but they're hawkish, we lose 1.5. If they're dovish, we gain 1.5. So in the next 3 hours, we're going to know what ends up playing out. IWM is catching a bit. I think similar to Open Door, the reason IWM's up 1% right here, it's an anticipation of the rate cut. And so the question becomes, do you sell into the news when you officially get it, now that people are buying it up before? Or does it just keep going higher? And we're going to see Open Door right there up 14%, and then IWM small caps, that is up 1% on the day. Maybe he calls in sick. Also, yeah, remember, we get the dot plot. So if the dot plot says 75 bips by end of year, yeah, we're going higher. CoreWeave or Nebius? I like Nebius. I know Jose likes CoreWeave, but from a valuation perspective, Nebius still makes more sense to me. I mean, like, it's a $22 billion market cap. They just got a $20 billion deal. They're going to grow quadruple in 2026 compared to 2024, 400% growth rate. And from my understanding, they are not in a business model where they have to resell depreciating assets, aka GPUs. They're able to actually build out data center, and then they have some other software parts of the business like ClickHouse, which is diversifying them. But it's not the same type of model as a CoreWeave. Now, maybe I'm wrong because again, I'm not super deep into both names, but I feel like Nebius at 20 billion versus CoreWeave at what? 57 billion. I feel like Nebius is the better buy. Especially if Roman, one of the co-founders of Nebius, is right and they're getting more deals like the Microsoft deals in the future. And if they get another $20 billion deal and the market cap's only 22 billion, like I feel like that one's going higher. So that would be my guess. Microsoft will pay 6.2 billion to rent AI computing power in Norway. Dude, these companies are just dropping billions like it's nothing. Like it is nothing all across the world to be able to continue allocating and building out their data centers. Yesterday was the UK, now it is Norway. Yeah, there you go. Microsoft Norway, 6.2 billion to rent AI computing power in Norway. Is anyone here in the chat from Norway? The cool thing about Norway is you guys have that oil fund. And so the Norway Investment Fund, is that what, a couple trillion? How much it's worth? 2 trillion. Yeah, it's worth 2 trillion. And it's in a ton of US tech companies. They actually sold their Tesla position though last year. They sold a decent amount of it, but yeah, the quality of living in Norway is very good because of that oil dividend that people had. All right, we got some Norwegians in the chat. I love it. We got cheap electricity. They stole all that oil from Denmark. Did they? I have no idea. I'm not well versed in. Let's ask Gemini. Did Norway steal their oil from Denmark? Let's see what politically correct. No, Norway did not steal its oil. The two countries, along with the United Kingdom, peacefully settled their North Sea maritime. Gemini's, you're not going to get me to say some shit like that. Gemini's like, I'm not saying some shit like that. I still don't like Denmark, dude. I will always have beef with Denmark, unfortunately. For those that know, they know. For those that know, they know. I just never been a fan of that country. Until I die, I will not be a fan of that country. Because I should have won the Slovenian International Championship in 2016, and that stupid 3-2 decision that allowed Denmark to beat the United States. The entire crowd, dude, when I mean the entire, I've told this story a billion times, but when the crowd heard 3-2 Denmark, the gasp, you could like audibly hear, everyone was like, what? They really just beat the United States in finals? Like, it was stupid, bro. It was the biggest screw of all time. The biggest screw of all time. Could have been world champions, bro. Could have been world freaking champions. If not for Denmark. The Danish girl was not better, bro. You guys saw the video. I already showed you guys the video. She was not that good, bro. Like, literally, she said nothing. If you actually watch the debate, she said nothing. Again, I just think that, dude, this was when Trump was gaining his momentum in 2016. I'm telling you, the amount of hate we got as Team USA in 2016 from the Europeans because they hated Trump. Like, when I mean hated Trump, they despised him in 2016. And they associated us with like the MAGA right, blah, blah, blah. And I just think some of those judges on that panel couldn't see through their bias. I really do. It's coping, but still. Enzo, thanks for the $20 super chat. What do you think about Jeremy's opinion on Hood? He thinks Hood can hit 60 in 2026 if there's a little bit of a bear market, not being able to compete with 2025 earnings. Yeah, look, if we get a bear market, Hood's going to have some really tough comps. It's going to be tough for them to win. So I agree with Jeremy. If we have a bear market, then yes, it'll be bad for Hood. But then again, I just think that's the same for a lot of stocks. Like, if we get a bear market, it's going to be tough for a bunch of companies to put up good numbers. So if he wants to use Hood as his short, that's fine. If we get a bear market, then yeah, Hood will go down. But in general, I think if the market stays stable, like, I think Hood's going to continue their growth. Now, it's going to be tough because they've been basically doing $1 billion a quarter. So next year, they're going to have to do more than $1 billion every quarter. But let's say they don't. Let's say they're not able to live up to it for whatever reason. I'm buying that dip. Like I just like I am like it's so refreshing when you have conviction and so freeing because you just don't care. You really just don't care. Like, and if there's a massive dip, you just say, I'm leaning in because I know 10 years from now where the story's going. So that would be kind of my thought on how to think of it long term. And also, if it's a hedge, then it is what it is, right? If he expects it to go to zero, then that's a hedge, right? If the market tanks, the hedge prints. If it doesn't, the hedge goes to zero. That's kind of the point of a hedge. So I don't even think it's that big of a deal. Dave, thank you for my channel member. Appreciate it. Dave, thank you for being here, and thank you for becoming a channel member. DGSS, thank you for the $20 super chat. Admit you and your bros around here are awesome. Keep up the good work. DGS, thank you again for being here. And thank you for the super chat. Sumit, thank you for the $5. The number should be based on what you want to spend per year, not a fixed number like 3 million. The target number will change by the time you get to 3 million. That is true. The number on your retirement definitely changes, but it obviously does change based on your spending. Palantir right here, 165. We don't have a bunch of Palantir updates over the past couple of weeks. Again, the fact that, after Citron, Palantir fell to 140. There was a lot of, I had real blonde broker come on the show and she said 120. I was like, I don't know if we get to 120. That's a bit aggressive. And we'll see. Maybe we do get to 120. I still think that's aggressive, but you did have a lot of, negativity out there on the stock. And look, it's come back. It's not back at 190, but that's okay. From 140 to 165, we were at 170. Jason says from a TA perspective, if we get above 173 and hold it, we're probably back on the track to 190. I'm pretty happy with Palantir's performance. I'm pretty damn happy. If this thing can just stay at these levels, does not have to go to the moon, but not having it collapse to me is the most important thing. So I think that's good for Palantir. Gorilla Technology Company. This one is up 12% right here. Again, this is a small cap. This is an Internet of Things company, $450 million market cap. Looks like there might be some headline right there. And that's why that's up. That's up 12%. Jan says, I'm a Dane here. Admit I've been following you for a while. Jan, thank you for being here. I don't actually hate the Danish people or anything like that. It's been almost 10 years and I'm not over that loss. Amit, have you ever done a video with Jeremy? Yes, we did an interview a while ago, back in 2023. So he's been on the channel, and I respect Jeremy. I think he's a great financial mind, and he's been on YouTube for a long time. I don't agree with him on every pick. He probably doesn't agree with me on every pick, but I do know he's getting a lot of flack because he sold Tesla at 250, and the Tesla community is brutal, and so obviously they're letting him know how they feel. But the problem is, though, if you look at Jeremy's tweets, and again, I like Jeremy, but he likes baiting the Tesla community. He's just I think he had a tweet if this tweet gets 10,000 likes, I'll buy all my Tesla back, knowing he's not going to get 10,000 likes. He likes baiting them and just making them get a reaction. And he literally doesn't care what they think, so it's just funny for him. But yeah, he's not that deep into Tesla anymore. StubHub is live. Is it open? I thought that was at 1 p.m. Okay. StubHub. I don't see the chart on Legend yet. Let me check on mobile. StubHub. That's kind of early, dude. I feel like it happens at 1 p.m. Oh yeah, no, it's not out yet. 2350. It's not out yet. Yeah, it should be in an hour. You guys probably have your shares, but it's not it's not live yet. Powell's at 230. Powell's at 230. Yeah, look, his average was 13, so selling at 250 was a lot. I reacted to the video the day it came out. I didn't agree with it simply because my logic was simple. If you got Tesla at 13, the odds of Tesla going back down anywhere near that, I think, are slim to none. So I know at 250, there was a lot of quote unquote brand damage and political stuff and this and that. And yeah, but I'm just wait a second. Okay, what's the worst case? It goes back to 150. Your average is at 13. And unless you think it stays stuck at 150 for so long and the opportunity cost of that capital, which I think you just realize that people would buy that. There's too much excitement around Tesla as an AI company for that to be. The thing barely got to 260 before people stepped in after he said Trump was on the Epstein files. Like, you know, the craziest thing that could happen, and the stock barely tanks. So my logic was, it's a lottery ticket now. If your average on Tesla is $13, same thing with Palantir. If your average is $10, it is a lottery ticket. The odds of it going down that low or anywhere near that is basically zero. So now you just sit back and let it play out. And like 10 years from now, if you have Tesla at $13, like Tesla's probably worth more than $250. So I didn't get the logic on the sell, but he made a ton of money off of it. So if he just has a better place to put the money, then that's what you do. I'm not saying Tesla's not expensive either, just like Palantir. They're both expensive. I'm just saying these are household names at this point. These are companies that are not going anywhere for the next 10 years. And they likely will always trade at a higher premium. And so you kind of just keep those shares and let it play out, which is not too crazy. Let's look at the option flow today. Okay, this is the updated one I have. NVIDIA, 1.1 million. Opendoor, 640,000. Tesla, 638. Opendoor is ahead of Tesla, folks. My goodness. Lyft's at 268. Palantir's at 247. Then you have Apple, Oracle, Neo, AMD, JD, Amazon, Galaxy, Baba, Snapchat, IONQ, Pinduoduo, Uber, D-Wave made the top 20 so far. Broadcom and MicroStrategy. That is an interesting mix 2 hours into the market open of names that are being traded. And we'll see how that changes when we get JPOW. Yeah, 4-to-1 ratio of call to puts on Opendoor. The other bullish one is Galaxy Digital. Look at that, 19 times. 157,000 puts, 7,000 or 150,000 calls, 7,000 puts. Galaxy, which is now kind of transitioning into a Bitcoin, or not a Bitcoin, a data center play as well. That stock's up 3% on the day. Year to date, it's up 80%. Who would have thought the Bitcoin miners would have just completely pivoted into AI data centers? I mean, it's quite phenomenal. And it's made a lot of people a ton of money if you've been able to catch that. Which is not too bad. Not too bad. So there we go. Should we buy Galaxy or StubHub? Honestly, I've not done any DD on both, but I think StubHub will do well. I don't know, dude. It's ticketing at the end of the day. Is that really the most exciting? But I think the IPO will do. Every IPO so far has done well, except Klarna. I mean, it's up above the price, but I thought it would be way better, bro. I thought it'd be way better. Klarna down 3%. I asked Amir's from Sweden. I asked him his thoughts on Klarna. He's like, bro, it's like 85% of the population uses Klarna every day, multiple times a day. They have a stranglehold on Sweden. They've been growing aggressively in Europe. And they just got a Walmart partnership, and Walmart ditched the firm. So, I don't know. I thought this IPO would be way better. But this one's been a bit in the gutter. Hut 8 Mining, is that one also becoming a data center play? That one's up 2.63%. How much are these guys up year to date? Wow, 60%, dude. Past 6 months, they're up 200%. I don't even know. I can't even confirm they pivoted into a data center play, but why else are they up 200% in 6 months? This was a Bitcoin miner, and it has to be a data center play now. It's quite incredible. Yeah, but only 3 people live in Sweden. Okay, more than 3 people live in Sweden. Sweden population has 10 million. Dude, that's double of Norway. Norway has only 5 million. That's probably why the cost of living is, or the quality of living is so good. There's only 5 million people. Sweden, 10.57 million. How many people are in the UK? United Kingdom. I'm going to guess like 20 million. Oh, never mind. 69 million. Okay, that's way bigger than I thought. Okay, so that is aggressive. Yeah, it's not 20 million. It's way more than that. I got to come to the UK. We got to do a UK meetup one day. We got to do that one day. Guess the population of Poland, Amit? 12 million. Poland population. Dude, why am I so bad at this, bro? 36 million? I got skewed because of freaking Sweden. I was like, all right, that's going to be less. Dude, Poland has almost as many people as Canada. Why does Canada barely have people? Canada's too big to have only 40 million people. Their land mass is not as much as the United States, but it's up there, right? If not more. I mean, it might be a little bit more. We have 350. They have 40. Amit thinks 80% of the world lives in the US. People do exist outside of the United States. I need to go outside, bro. I need to go outside. The Netherlands, okay, I'm going to go 25 million for the Netherlands. Netherlands population. 18 million, okay. I'm not that far off. It's cold. Dude, Amir said Sweden is cold. Amir's like 70 degrees Fahrenheit is like the hottest it's ever going to be in Sweden. Apparently he was burning. I was like, bro, it's kind of windy outside. He's like, dude, it's freaking hot. I was like, no, it's kind of windy. You got to put on a hoodie. He's like, no, dude. That's the one thing I like about the Northeast. It's a lot more seasonal. You get a bunch of different experiences and hot and cold and hoodie weather, autumn weather, spring weather, all that stuff. Venezuela, okay, I'm going to guess 30 million. 28 million, okay, not too bad. Not too bad. Not too bad. All right, guys, I think that's it. We got a couple hours. Everyone go get some lunch, and then we will get Jay Powell at 2:30. I'll be live at 2:20. We'll get an answer by 2 o'clock. If you're following me on Twitter, I'll link my Twitter right here. I will tweet out immediately at 2 o'clock what the decision is. It's probably going to be 25 basis points. But if it's not, there's going to definitely be some stocks that move up or down. So we'll see. But I will be live at 2:20, 10 minutes before. And at 2:30, we will get an answer. Czech Republic. I'm going to guess like 40 million. Never mind, 10 million. 10 million. Okay. I'm not the best in this. I'm Eastern Standard, so 2:30 Eastern. 2:30 Eastern. So whatever you calculate for 2:30 Eastern, that's what it'll be. Why'd the bricks stop at the top? Don't worry about that. Don't worry about that. Don't worry about that. That's not something we have to. Not something we have to worry about. You know, just trust Arnie. Arnie said the bricks are real. That's what matters. All right, word of the day. What do we got? Word of the day is piranha. I should know this word. This is a common word. Piranha.
Piranha.
Why did he say it like that?
Piranha.
Yeah, that was kind of zesty, right? That was kind of piranha. That was that was a little zesty from dictionary.com. A small carnivorous freshwater fish native to South America. The field trip group watched in fascination as the aquarium's piranha darted between rocks. Piranha are native to the Amazon basin and known for their carnivorous disposition. I feel like I know what these are, right? Yeah, these are fish, right? Yeah, these things. These things. Can you eat these? Can you eat piranhas? Yes, you can eat piranhas. They're part of a common food source for most people living in the Amazon of South America. Okay, there you go. There you go. Ain't no way you ever watched Animal Planet? Yeah, I guess not. I guess not. They eat you? Wait, they eat you? Do piranhas eat humans? No, they don't actively hunt humans. The idea is a myth largely popularized by films and sensationalized accounts, though attacks can occur, especially when food is scarce or scarce, whatever, during a nesting season, often results. Okay, so it's not like an active thing that they do. Dude, some of these words. Some of these words. All right, folks, that is it. We'll be back in a little bit. Let's just get one last look at the markets. Grab 598, Tesla 418, Palantir 165, hoodie 116, SoFi 27, S&P 659. We are going to see either a massive move up or a massive move down after we get the decision by the Fed. I'll be live at 2:20. That will go on until the market close. And we're going to see. We're going to see how this ends up playing out. So, all right, 2 p.m. we'll get the answer. 2:20 I'll be live. Thank you all for being here in the morning. And we all get to obsess about someone talking about monetary policy for the next 3 hours. Because that's what we do as investors. That is what we do. All right. Thank you, everybody. I'll see you guys in a little bit. Bye, everyone.